Hello, hi everyone.
Hi, good morning. That's great.
Ciao, Benoît.
Good morning, Anna Maria.
Good to see you.
Mr. Haag, welcome. It's a pleasure to have you on board today.
Yeah, thank you. It's my pleasure to be able to participate. This is a great initiative.
Thank you. Thank you so much.
So just Benoît, basically in I would say 9:30. So I give you the start, and you can really kick off the meeting as if we were physically present.
Okay.
So the floor and microphone will be yours, and I will stop sharing my screen so that also you can also share your slides. Or you prefer me to share them? Is as you wish.
Yeah, you can. It's only a few at the end, so I'm not using slides in the beginning.
Okay.
And then I will ask you, and then it's good if you can put the slides up.
This is great. Okay. Yeah. Great.
Hi Andrea, good to have you.
Ciao, bonjour Benoît. Ça va?
Bonjour. C'est en partie grâce à toi qu'on est là. Disons que tu nous soutiens.
Ouais, c'est bon de se revoir, même si c'est seulement en vidéo.
Yeah, what a disaster. Anyway.
English. 1, 2, 3 test. Can you hear me? A posto? 1, 2, 3 test. Update out.
Buongiorno a tutti. È il nostro onore.
Good morning, you all. It is a great pleasure to welcome you to the first conference, the first online conference organized by Finance Watch along with its network of Italian members. As you might have read in the program, this online conference will be held in Italian with simultaneous interpreting into English and into Italian for anybody speaking English. So if you have any questions or if you have any problems, please write your comment or question in the chat box and we will get back to you. It's a pleasure now to hand the floor over to the Secretary-General of Finance Watch, Benoît Lallemand, for an introductory remark and welcome address.
Thanks a lot, Julia. A warm welcome to all of you. I'm sorry that I cannot address you in Italian. I will try to speak slowly. I know when I'm excited, I tend to speak fast, and I am excited as we officially launched today our Italian national network. Before anything else, I want to thank our dear Italian members and my colleague Giulia Porino, whom you just heard, who deserve all the credit for organizing this event. They have put together an impressive lineup of speakers, whom I also thank warmly in advance for sharing their insights. And please speak freely, share your convictions and your vision. I think our times require us to be very ambitious. I'm sorry also we're not meeting in person, obviously. I think our national networks have to be about people. They have to be about culture, about values. And certainly for the launch of our Italian network, the in-person version, I think we should have Italian food and wine. So let's make sure we do that later. Since our creation, we've had very engaged Italian members, and thus raising our flag together in Italy today, I think is a great accomplishment for a young association. Let me explain why. Next year, Finance Watch will celebrate its 10th anniversary. And what are we about really? I think we're about robust expertise on one side and then democratic legitimacy on the other. We believe that only both combined can contribute to making finance serve society. And this was also the conviction of the Commission and others who have been supporting us since our creation for this reason. I think there isn't another organization which combines both, and certainly not on the breadth of topics that we cover. Our friend Mario Nava will remember all of this very well as he was there when we were created. So quickly, the robust expertise. We have a secretariat in Brussels, which is made of people with 5, 10, 20 years, sometimes experience in the financial sector, in financial regulation or specialized financial communications. And then democratic legitimacy. Well, we are a membership association. We have more than 100 members in 20 European countries. So we don't just pretend to represent society via our members, we actually do. And we see in Italy, we see this in Italy with trade unions, consumer associations, representatives of ethical finance, what we call the pioneers in the financial sector, but also academia. And we need even more constituencies around the table. Now, why national networks, you might ask? I think 2 good reasons. First, why the rules of the game for private finance, but also increasingly for public finance or fiscal policy. These rules are fixed in Brussels, but the problem that they should address or the impact they will have takes place on the ground in the member states. So we need to understand this national context and we need to voice national citizens' concerns in Brussels. The second reason to have national networks, in a nutshell, is that if you want to weigh in, if you want to influence decisions in Brussels, you have to convince ministries of finance and other national financial policymakers, because ultimately, if I can say a bit provocatively, member states rule Europe. They will take the ultimate decisions. You might not have that perception when you sit in Italy, because unfortunately, governments sometimes, when they come back from taking decisions in Brussels and they know their population is not going to like it, they blame Brussels. And then when the decisions are good, they think they will be popular, then they take the credit and say, well, that's because I was there. And so that gives a very skewed perspective of what's happening in Brussels. I have to tell you this, we've been working on financial regulation for 10 years. And unfortunately, in the end, well, we have the Commission, which can be pretty ambitious. We have the Parliament, the EU Parliament, which sometimes raises the bar a bit higher. And then member states, unfortunately, sometimes will weigh in the balance to make sure that there isn't anything in the decisions that would hurt their national champions, which is why we need this counterweight and why we need to weigh in member states and have these national networks. So we need that combination of strong expertise in Brussels, expertise and democratic legitimacy in the member states, in Italy, and a coordination between pushing our public interest arguments in the major capitals and in Brussels. Now, enough about the organization for a second, and a few words about what's happening in the real world. Rather than describing now all of our areas of work, and in fact, I know Mr. Haag, who speaks after me, will mention a few pieces of regulation we also work on. But right now, I just want to quickly highlight three of our priorities for next year. One is financial stability, which is still an issue 10 years after the crisis, financial inclusion, and then sustainable finance in general. As I said, stability is still an issue, and there are two major pieces of regulation coming up. One on banks, the capital requirements regulation, and one on insurance, Solvency II, which will be dealing about insurance and banks covering their own risks, including in relation with climate change. So this is an important battle. But in fact, also later today, we might have announcements regarding how banks should be able to deal with a possible rise in non-performing loans, and some proposals from the Commission, which we might be discussing. So that is still about financial stability. Then financial inclusion, and that is in particular, it's financial inclusion in retail in general, but in particular how the least well-off in society, fragile individuals, fragile households are impacted by irresponsible lending, predatory lending practices, and also a lack of debt advice services. So we think over-indebtedness is an issue, and it might become an even bigger issue as a result of COVID. So stability, inclusion, and then sustainable finance in general, which includes the public finance side of things, and how the recovery plans should be more about resilience than recovery. They should be more about transforming the economy to make it truly sustainable, rather than sort of rebooting the old economy. And in that transition, we need to leave no one behind, support workers, support citizens, whatever it takes, really. Now, before I conclude, and since we just talked about public finance or fiscal policy, I couldn't resist but tackle a few cliches that we sometimes hear in Brussels about Italy. And I'm stealing most of this from most of the data from an Austrian economist, which I would recommend you to follow. His name is Philipp Heinberger. Julia, can you put the slides up? Thank you. I think you want to put them up. Yeah. So if you take first slides, it's just a few data points that we often neglect. This is net exports of goods and services in percentage of GDP for Italy. So what you see there is that, contrary to what we often hear, which is that Italy lives beyond its means, it actually exports more than in imports. So basically, what you see is there was a dip between 2005 and 2012, but if you take that away, Italy actually lives below its means. If you want to go to next slide, this is private sector debt in percentage of GDP. So here again, you see that when it comes to private debt, Italy is not doing so bad. In fact, Luxembourg, the Netherlands, Sweden, Norway, Denmark have much higher rates of private debt. So I thought that's interesting as well. If you want to go to the next slide, I think. Yeah, I think this is my favorite, because this is basically the primary balance. So basically the budget surpluses that Italy has been running for the past few years. If you exclude the repayment of the debt that was mainly contracted, as you might know, in the 1980s. So there might have been some mismanagement then for sure, but since then, Italy has been paying about 65 billion euros in interest to that debt. If you remove that payment of interest on this past debt, Italy has actually been as frugal as the Netherlands, Austria, or even Germany. So think that raises an interesting debate. If you want to go to the next slide, this is what Italy loses in terms of corporate tax revenues because of tax havens. And you see that it runs in the billions of euros. You see below that it loses 2.7 billion to Luxembourg, 1.5 to Ireland, and 800 million, sorry, to the Netherlands. So all of this would contribute otherwise to Italy's fiscal capacity. If you want to go to the next slide. Now, as a result of indeed some politics over the last few years, which have been constraining public spending, indeed you see that net public investment has gone down drastically since the financial crisis. And if you move to the next slide, you see that this has had a major impact in the capacity of Italy to maintain the proper healthcare system, in particular then when COVID hit. And again, if you look at the left side graph, you see this runs contrary to the fact that Italy has been running primary account surpluses. Final slide, please. That's another interesting, I think, figure. It's the greenness of stimulus index produced by Vivid Economics. It's a London consultancy, and this is ranking basically the fiscal efforts that countries have been doing for the last month since March, basically as a reaction to COVID. And here, on the contrary, you see Italy on the right-hand side. I think it's the 7th from the right. This is basically looking at positive contributions in terms of basically environmental objectives or climate change versus negative contributions. And there you see that possibly what Italy has been spending in terms of fiscal capacity has gone more to a fossil fuel economy than to a green economy. So it's not just the amount you're allowed to spend, it's also how you spend it. And I think this should be a key discussion today. So Julia, you can close the slides now, and I will now conclude. Now, these slides were about fiscal policy, macroeconomics, but I think they show how much space there can be between the doxa or the common opinion and the reality. And the same applies to private finance and its regulation. I think we need to balance the debate with facts, with stories from the daily experience of workers and consumers in Italy, and deconstruct sometimes the fallacious arguments that are put forward. I'm afraid to say on a regular basis by the financial lobby, or at least we see that in Brussels. So I call on all of us, including national and EU policymakers, who show their interest by being with us today. And I thank the Commission who committed 3 senior speakers for one event. I know that's quite uncommon for them. I call on all of us to join forces in the coming months to ensure that the public interest prevails in the key debates that I mentioned. So financial stability, financial inclusion in retail, but also sustainable finance, including fiscal policy. We're launching a mini website in Italian that we want to be populated by our members, by our partners, where we'll share from Brussels or EU expertise in Italian. And our upcoming campaigns on the key themes that I mentioned will all be translated in Italian as well. So I hope this will help give momentum to the debates in Italy. Thank you very much. Let's keep our promise to celebrate together and pursue exchanges around Italian food and wine. I hope in the near future. Have a great conference, and long live Finance Watch Italy.
Molte grazie, Benoît.
Thank you very much, Benoît. We're now going to hear from the second speaker. Marcel Haag, who's director of the General Directorate for Financial Stability, Financial Services and the Capital Market Union, DG FISMA, from the European Commission. So we would like to ask the host to unmute Mr. Haag.
Mr. Haag?
Yes, I can hear you. Yes, I can hear you very well. Can you hear me?
Yes, very well. So the floor is yours.
Thank you very much. Ladies and gentlemen, Good morning. Let me start by thanking Benoît Lallemand and Finance Watch as a whole for inviting me to this conference for the launch of its Italian network. I'm very happy to be able to join for this important event. As you're all aware, advocacy in financial services from the consumer perspective plays a very important role for policymaking. The Commission, as well as the co-legislators, the European Parliament and the Council, depend on the expertise of consumer organizations to provide a balanced legislation, taking very diverse interests from different stakeholders into account. It is an important counterweight to industry stakeholders, which are putting important resources in their advocacy work. For this reason, the Commission decided several years ago to financially support consumer organizations, including Finance Watch, to enable them to become a center of expertise and provide this expertise to policymakers. This task remains crucial today, also in view of the COVID-19 crisis, which particularly affects consumers. Providing this expertise from a consumer angle will keep its importance in the foreseeable future. Beyond advocacy, consumer organizations, and in particular Finance Watch, also fulfill another important task, which is informing consumers. Informing consumers and involving them in policy making is an essential aspect in a democratic society. But communication with consumers is not easy, in particular in the area of financial services, which is technical and complex, but it is at the same time crucial for consumers and the economic system as a whole, and indeed for all of us to lead fulfilling lives. Fortunately, based on the Commission proposal on the Single Market Programme, the European Parliament and the Council have recently agreed to prolong the financial support through the next EU long-term budget. The Commission will thus be able to continue financing consumer organizations in the years to come to ensure expertise in financial services and information to consumers. To fulfill these tasks, a broad and solid base is indispensable in the Member States. For this reason, we strongly welcome the creation of a Finance Watch network in Italy. A broad geographical coverage is important to be able to gather relevant information from the individual Member States, but also to ensure targeted communication to consumers in the different Member States and in the respective languages. Going forward, many challenges lie ahead of us, including many that are relevant for consumers. A strong voice of consumers in policymaking will thus be essential. Let me mention a few of the challenges that are lying ahead of us. First, there are COVID-19 related challenges. Beyond the immediate and continuing challenges for the health system, the COVID-19 pandemic has led to significant economic difficulties. Due to the loss of jobs and income, many consumers have difficulties in repaying their credit, in particular for mortgages. In most Member States, these difficulties have been addressed through temporary payment moratoria. Yet, these moratoria are coming to an end and may leave consumers in a situation of over-indebtedness. We will have to see how to address this situation. At the same time, we need to limit a rise in non-performing loans on the balance sheets of the banks, as they would affect their ability to provide new loans and hamper economic recovery. I understand that this is a topic that is on your agenda today. The second issue I would like to mention is digitalization. Already before the COVID-19 pandemic, digitalization has fundamentally changed our lives. The pandemic has reinforced and accelerated this trend. We need to ensure that we set the right framework which allows us to embrace digitalization and reap its opportunities, including for financial inclusion, while at the same time addressing potential risks. In this context, the Commission has recently adopted 2 legislative proposals and a digital finance strategy setting out the way forward in the years to come. I know that Finance Watch is closely monitoring this area, which has an important impact across our societies and economies, including in financial services. Third, there are pressing sustainability and sustainable finance. Sustainable finance aims at supporting the European Green Deal by channeling private investment into the transition to a climate neutral, climate resilient, resource efficient, and just economy as a complement to public money. With the establishment of the taxonomy, the EU is the front runner worldwide. A lot of work is ongoing to make the taxonomy operational. Delegated regulations to supplement the taxonomy are being developed. As part of the European Green Deal, the Commission is preparing a renewed sustainable finance strategy. We're also working on a proposal for an EU Green Bond standard regulation. And these are only some examples of the work strands that are ongoing in the field of sustainable finance. I know that Finance Watch is very active in this area, and I understand that this is also a subject that will be discussed in the course of this day at your conference. Fourth, we also need to ensure financial inclusion as well as financial literacy. Mr. Lallemand already mentioned this. Financial inclusion means access to financial services for everyone. By providing a right to a basic bank account, the Payment Account Directive, which is now up for review, addresses an important aspect. But financial inclusion goes much beyond this. For instance, it also concerns the accessibility and acceptance of cash. Digitalization can facilitate access to financial services, but it may also create obstacles for some. Financial literacy, in turn, can help address financial inclusion. Financial literacy is crucial to empower consumers to take the right decisions. This is in the interest of individual consumers, but also in the interest of the society as a whole. But financial literacy is generally much too low, as the OECD work on adult literacy has confirmed. A lot of work is needed in the future in this area. The main responsibility for increasing financial literacy, of course, lies with the member states. But the EU can complement and support the work, and it will do so. These are only some of the challenges that lie ahead. Beyond that, there are many other work strands which are important for consumers. For instance, in the payment area, for which the Commission has recently set out its strategy for the next years, or the work on retail investment, where the Commission plans to come forward with a retail investment strategy in 2022. All these challenges and work strands have important implications for consumers. They will require a lot of effort from everyone involved, including from Finance Watch and its members. And I'm glad that Finance Watch will be supported in this by a strong Italian network. Let me conclude by wishing you all a very fruitful and successful conference today in the interest of the citizens and consumers here in Italy and in the entire EU. Thank you for your attention.
Mr. Haag, grazie mille.
Mr. Haag, thank you very much for participating and for your contribution in this first Finance Watch conference organized with the Italian members and a newly established network, as already said by Benoît Lallemand. We appreciate very much the participation of the European Commission. So thanks truly. Of course, we invite you to stay with us throughout the event if possible.
I will try to attend at least the part.
Grazie mille. La ringraziamo molto.
Thank you very much. I will now close connection with Mr. Haag, microphone and video. Thank you.
Passerei adesso
and I will hand the floor over to the first keynote speech for today, the third speaker for now.
Chiederei a Dottor Mario Nava.
Mario Nava, if he is with us.
E se può gentilmente aprire video e audio.
He should switch on the camera and unmute himself to start his presentation.
I'll just say a word, Julia, as you prepare the slides, if that's okay.
Sure, please, Benoît, of course.
So I want to thank Mr. Haag for the introduction and the kind words, and also very happy that Mario Nava can be with us. As I said, Mario was there when we were created. He's been a strong supporter. Sometimes we've disagreed on some important files, but there's always been this joint willingness to have the two sides of the debate, and I think that this is what we're about, and we should continue. And we're delighted that now that Mario Nava has left DG FISMA, we keep in touch and we keep engaging in his crucial new function at DG Reform. If he was still there in FISMA, we might disagree a bit later today about some of the proposals from the Commission on the NPLs, but I'll leave that for later.
Dottor Haag, se è ancora con noi, le chiederemo solo di... Eccolo.
Oh, Mr. Haag, are you still with us? I don't know whether you wanted to take the floor.
Yes, here we go.
Yes. Thank you. I can only agree with what Benoît just said. On my side, I'm more than happy to continue the good cooperation between Finance Watch and the services of DG FISMA, and I'm convinced that also our new commissioner, Mrs. McGuinness, is very attentive and very sensitive to the concerns of individual investors and consumers more broadly. So I'm convinced that also with our new leadership in the Commission, we will continue to place a strong emphasis on consumer concerns and we'll continue our very close dialogue with Finance Watch.
Thank you.
Grazie mille, dottor Haag, per questa ulteriore intervento.
Thank you so much, Mr. Haag.
Stiamo ora aspettando
We're just,
il dottor Nava di DG Reform
okay, I see Mr. Nava.
online. Eccolo.
Okay, I see you. Good morning.
Hello.
Buongiorno.
Buongiorno, buongiorno a tutti.
Good morning.
È tutto suo.
You have the floor.
Grazie,
Wow,
grazie mille.
thank you.
Microfono e video.
Perfetto, grazie mille. Grazie
Sounds good. Thank you.
dell'invito e
Thank you for
di
inviting me, and apologies
partecipazione rapida. Prima di tutto grazie
for being a little bit late. I'd like to thank the organizers of Finance Watch, and I wish to thank all of the Italian members of Finance Watch Italy. Please allow me to spend a couple of words. First of all, the reason why I'm more than glad to accept your invitation and also to provide you with some pieces of information on finance and environment in the era of COVID. That's a reason why, an easy reason why I accepted your invitation. So far, 4 directors approved that provided support to Finance Watch. And actually, I was the first and the third. Maybe the first term was not that easy because we all remember how everything started. It started with the main need to have a counter lobbying in the moment in which we were asking a lot to the financial industry. We're asking the financial industry to basically change the soundness approach, and also the common equity tier 1 of banks shifted from 2.5 to 10.5 plus. So we were asking them to change a lot. We asked the industry to change a lot, and they opposed some, let's say, resistance, but there were cost issues involved. But it was important anyway to voice those that would benefit from this change. And this is the reason why Finance Watch started, I think it was 7 or 8 years ago, I don't remember exactly, but we started with the first financial support by the DG FISMA, and then there was another director that continued our activity. Then I came back, and you've heard Mr. Haag that talked about that extensively. So this is the reason why I'm more than happy to be here with you, although now I have other mandates and deal with other responsibilities. But I continue to stress the importance of all of the activities carried out so far. So these activities were quite clear and evident during the crisis. So think about what happened last February or March or April. It happened that at the beginning of the crisis, where it was not entirely clear how long it would last and what we had to do, or what impact on the demand and supply would be. Well, at that time, and where everything started, the very first reaction by governments, most of governments, and also by the European authorities and international authorities, well, the first reaction was that of relying on the financial sector. If you think about it, the very first measures adopted in terms of extension of liquidity and also lending and access to loans, well, they involved all of the measures deployed by the financial sector. So we may say that the financial sector shifted, let's say, from being in 2011, 2012 at the origin of the crisis, well, it became the origin of the solution, or at least at the very beginning of the solution. Then, always within a good financial regulation, you do have the pillar of stability, and then the pillar of the voluntary approach, especially when it comes to the environmental and climate related issues. But what I believe is that the fact of, for instance, getting back within, well, let's say 10 years, financial stability to such an extent that governments could rely on the financial stability of the sector, well, this is, of course, something that we owe to banks, but also to a number of institutions like Finance Watch that helped us a lot in the general narratives. So this is the reason why I accepted with a great deal of enthusiasm the invitation to participate in today's event. What I'd like to bring to your attention is the response, let's say, to the crisis that the EU succeeded in deploying. I believe it was an extraordinary reaction, and many observers consider it as quite unexpected, because some observers had a sort of préjugé de favorable, as we say in Brussels. They thought that that Europe, well, this time again, will not be performing well, and Europe will not step in. So there was a sort of idea based on which this time again Europe would be somehow not ready to step in and provide support. Whereas Paolo Magri was a great expert who said that the situation was quite the opposite, because Europe in 4 weeks did something that before the crisis needed 4 years. And in 4 weeks, we actually did 3 things. The first one is to continue to develop the regulatory policy, both from the standpoint of stability and also from the viewpoint of targets and main goals. In 2019, we actually had some luck, but also the merit of being able to adopt all of the sustainable finance provisions and regulations like taxonomy, and also the benchmark rules, and also the financial advice rules. And all of this, well, together allowed then the financial sector and not only to play a buffer role and stability role where needed, but also to act as a driver in climate change. So we rapidly realized that climate change was so huge, and the challenge was so huge that the needs for investments were outstanding, and that the Keynes approach had to be adopted, and using only the government resources would be inconceivable and not enough, both from the financial standpoint, but also and mostly from the political viewpoint, because of course there are some great advantages in resorting to the market, because there's the continuous monitoring of the let's say, of the wishes of investors. And it's not just a top-down approach, but actually the decision is somehow checked for consistency on the ground. So this is the approach of the Juncker Plan 2014-2015, when the EU decided it intended to act beyond the regulatory rationale, and also to adopt a specific approach linked to the bridging of the investment gaps. And the Juncker Plan, with the 500 billion investments, which actually amounted to 530 billions, well, they were all decentralized. So there was the continuous monitoring and control by the markets. So I believe this is paramount, because the sustainable finance and all of the benchmark and sustainable finance and well, they don't oblige to invest in that sector. Rather, they oblige to be transparent and to clearly state to the world what you're investing on, and also what is the impact, not only from the financial standpoint, but also the impact on the environmental goal of that specific investment made. So, of course, all of this was possible thanks to the Paris Agreement made 5 years ago, but also thanks to a leadership, a leading role that Europe carried out. So the EU accounts for 7% of world population and 22% of GDP, and pollutes for 9%. But then the issue is that our citizens immediately showed and made us understand that we didn't just have to reduce from 9% to 0. Actually, what mattered was to convince the remaining 90% of countries to reduce emissions. If you look at the EU initiatives in terms of financial sustainability, well, These are all scalable initiatives. All of these initiatives are implemented in Europe, but also we look for international investors and also the sovereign funds all over the world. So until 6 months ago, I worked as financial regulator. And while traveling all over the world, it was clear that from the investors' viewpoint, there was a sort of demand for Europe. They wanted to have financial investments in Europe. Very often I was asked, for instance, from Hong Kong to Singapore, what do I have to buy if I want to invest in Europe? That was the main question 6 months ago. So if we move on to the RRF, the Recovery and Resilience Facility, the European Union has somehow conceived the RRF based on the same rationale. That is to say, institutions in Europe intend to provide a specific approach, but there's always a check, a double check made through the market. And in fact, the RRF is the main fund, or actually it is a facility. It is the main facility ever used by the European Union to make these types of investments. And it's not financed through national money, but it's financed by the market. So national governments just provide guarantees, and then the EU looks for resources in the markets. So the approach through the market is fundamental, and therefore an institution like your institution, Finance Watch, well, you're the watchdog, of course, and your role is essential. Why is the double check by the market fundamental? Because then you have a continuous assessment, not only of the availability in terms of carrying out these investments and making these investments, but also a continuous assessment and check on how the resources are used. The RRF, the Recovery and Resilience Facility, is not a fund, it is a facility. And the difference between a fund and a facility is that the fund is cost-based. Then if someone, for instance, a government has costs to incur, then it submits the invoice and the funds are reimbursed. With this, the facility is performance-based. Hence, the government has, first of all, to develop performance indicators or milestones and targets and midterm goals and final goals. And then, if all of these midterm and final goals are met, then the disbursement of funds is made, but that is upon performance. So this is based on the achievement of results. And this is fundamental because this eliminates, in a sense, or reduces any potential situation in which funds are not well spent. And this is also important for future generations. In fact, the fund is called Next Generation EU, and this name refers to the fact that the investment is going to be made from now until 2027, but then the payback will be from 2028 up to 2058. So this is truly the next generation EU. And of course, those that have to pay what we're spending now have not born yet. And those that will get the benefits of this approach are our sons. That is why it is defined as a named next generation. So the sustainability approach is there and the long-term perspective is there, because without it, there's no guarantee based on which the investments may truly repay and pay back until 2020 and 2058. So think about, for instance, making a non-sustainable investment, or think about making an investment which is against environmental goals, where the possibility to pay back in 2058 is close to zero. So if you think that the decarbonated assets may provide returns from 2040 onwards, well, that's wrong. That is not correct. So you have to reconsider your position. So this is fundamental, and it's fundamental to understand that there will be, of course, I don't know, what someone is asking, are we going to have a 2058? I'm reading in the Q&A session. Of course, you don't have to be so pessimist. There will be 2058. So it's around the corner. My daughter always tells me when I say 2050, she reminds me that she's going to be younger than me today in 2050. But what I see now is a lot of, determination. Everyone wants to improve. I'm in Brussels, and today Brussels is sunny. And this city decided that as from 2030, there will be electric vehicles only. And as from the 1st of January, 2021, the speed of vehicles in the city shall not exceed 30 kilometers per hour. So I don't know whether this is right or wrong, but it's a milestone along the way to sustainability. And many other cities are somehow implementing similar approaches. So 2058 will be there. The very last item I'd like to bring to your attention is the RRF, which is performance-based, and the performance is fundamental. So recently, or better, over the last few years, the EU supports the structural reforms of the countries. And as from January this year, this service has been turned into a DG. So it's not a service provided with the general directorate, rather it is a standalone DG, and its main target is to support member countries to conceive, develop, and finance all of the reforms. So why is it important? Because as we know, reforms are difficult, let's say, to implement, because of course reforms suffer from the timing consistency, because you have to pass them now and then you get the benefits who knows when. So sometimes it is difficult to have a discount rate for the future sufficiently high to discount today's costs. And this is a well-known problem. Juncker used to talk about that when he was prime minister in Luxembourg. So what we are trying to do now is to help member states, those that apply for it, of course, we're trying to help them in developing and implementing these reforms. So these reforms are essential. For instance, the head of my DG always says, we're not here to finance the status quo, but we're here to support the change and to finance the change. So change was at the heart of the agreement of the 21st of July, because the agreement of the 21st of July is an agreement for change, an agreement to increase recovery and resilience, to increase the growth, to have recovery, but then, and most of all, to have a resilience. And also a resilience that so far we've not had. So it is a pact for change, which is extremely important in this connection. And it's a sort of Marshall Plan because it is an important pact for change. And I believe this is a fundamental aspect, because the emphasis on reforms and investments, and this is something you find everywhere in the RRF and in all of our actions, well, this is central. And it is an area in which you have both the sector of finance and the sector of finance observers like you, and also the sector of environmental sustainability and climate sustainability, but environmental as a whole. And also all of the issues relating to mobility with the digital challenges and how the digital impact may improve sustainability. So these are the main pillars I like to refer to. That is to say, to consider the support to be given to reforms. And the three pillars I mentioned are consistent. They all go towards the same direction. We have to realize that what we are doing now is not easy. I mean, this approach entails structural change. So I would stop here, and I am available to answer to your questions. I don't have too much time, but because I am participating in another meeting, but I'd like to ask the organizers if you have any questions. Thank you. Thank you, Mario, for this exhaustive, let's say, overview. I'm sure that Benoît Lallemand has some remarks to make. Benoît, you have the floor.
Thanks a lot. Can you hear me? Yes. Thanks a lot for being there, Mario. I don't know if you heard me because you joined a bit late, but so it's a pleasure having you in also in your new capacity. You might have followed that Finance Watch is also starting to cover this side of the equation, so more of the public finance and the interaction with financial markets as well. And so, no, I mean, in a nutshell, I'd be keen to learn how you see the progressive integration of indeed macroeconomic objectives and macroeconomic stability and of course also long-term public debt sustainability with the other objectives, which are environmental sustainability, but also social justice and leaving no one behind. And I think this year will be key, 2021, next year, sorry, for finding a model which evolves from the past, where maybe there's been too much of an exclusive focus on short-term growth and reducing public debt at all costs. And so how we will see some review of the economic governance in the EU and a sort of new set of more balanced indicators, maybe. What's your take on that? And I think for Italians, it's pretty relevant as well.
Should I respond in English or in Italian?
You can do Italian, that's great.
Ok. Io penso che
Well, I believe that the long-term sustainability of debt is linked to a major variable, that is to say, the quality of the investment reforms. If we make reforms and investments into something sustainable, which is then able to pay back until 2058, then sustainability is guaranteed, both in terms of the numerators and the denominator, that is to say, the investment and the growth of the GDP. Most of sustainability of debt, sustainability in Europe was jeopardized by the weak growth of the denominator. And of course, this is the core of the issue and the core of the agreement of the 21st of July, that is to say, having reforms to have a new pathway for growth and sustainable growth. So now I do not see any major opposition when it comes to the environmental aspects and issues, because environmental issues are the true opportunity for growth. As I said before, if you want to invest in assets that are going to pay back in 2058, then you are not investing in the assets that we know now with all of the limits and limitations they have. You have to invest in innovative technologies, in sustainable technologies. And also, I'm interested in the fact that, well, I see a shift, a progressive shift on the demand side and on the supply side, a shift towards these sustainable and innovative technologies. So both huge and large investors, but also at retail level, they show this approach. I remember, for instance, if you go to a bank and you say, okay, I'd like to invest, what do you suggest to me? Well, you will be told, okay, you have to invest on an ESG fund. That is the evidence. So this is the evidence of your extraordinary work. But what matters is that when I suggest an ESG fund, well, someone really has to be convinced that such fund is really useful in terms of environmental impact. And also all of the financial advice issues and the benchmark issues and the transparency issues, all the things we mentioned so far. But I believe that the economic paradigm has changed. In the past, we just had regulations, whereas now the paradigm has become sort of macroeconomic a macroeconomic one. So already with the Juncker plan, we had adopted a different approach, and we had successfully solved the issue of the gap, the investment gap. But now we are dealing with the recovery, but also with the long-term sustainability and the resilience part of the sustainability.
Benoît, if you don't have any further comment,
Thank you.
thank you. Mario, grazie.
Mario, thank you. Marcella Corsi, one of today's panelists, a member of Finance Watch Italy and coordinator of our lab, who would like to ask you a question. I would like to say one thing. I read someone saying ESG funds and also think about consumers with less than 10,000 euros. That's right. 75% of ESG funds, well, you may start, I think, from 1,000 euros or even 100 euros. So either 1,000 or 100 euros can be, for instance, used in terms of investments. So the very last question, and then I have to go, unfortunately. Marcella Corsi, please. Here I am. Thank you, Mr. Nava, for being with us. It's a pleasure, and I'm sure, I hope we're gonna meet in person in Brussels sooner or later. But I like to refer to the reference you made to the next generation EU that will somehow be linked to all of the topics we are going to tackle today as Final Watch Italy. But my question is quite peculiar. I know that you are somehow also pay attention to the gender mainstreaming, and this is an important opportunity for me to ask you for a comment. Also continuing that in Italy, as you know, in the draft national plan in terms of resilience, there's a particular attention paid to gender equality. And also, I'm referring to the very last paragraph of the draft. There's a reference to the gender impact when it comes to the policies to be implemented thanks to the resources that you mentioned, so an ex-ante and post-impact. And of course, I hope that the Commission and your DG, I hope we can take advantage of this. Thanks. I was really glad this year for the fact that we've had a lot of requests in terms of gender mainstreaming, both in terms of impact assessment and, which is important and interesting, of course, but it's not what we are mainly focusing upon. We are interested in the ex-ante approach and knowing what reforms are impacting upon and how they can somehow impact on the crisis. This is something we are developing now. We have a lot of European members of parliament, like Mrs. Alexandra Gize and other ones, that are now analyzing this aspect with a great deal of attention. And I was happy to see that member states asked for technical support, because this means that member states are starting to be interested, and in the drafts that are now circulating, which I'm not commenting upon. Well, in the drafts, we see that a lot of countries are paying attention to this aspect. So thank you. I fear I really have to leave you now. Thank you. We thank you so much. Thank you so much for spending some time with us. Thank you.
Allora, se per favore intanto mi disattivate il video del dottor Nava, noi passiamo alla presentazione del primo panel.
Let's move on to the presentation of the first panel for today.
Scusate, abbiamo un piccolissimo problema tecnico che stiamo risolvendo.
We are trying to fix a technical problem. We'll be right with you. I would like to ask the panelists of the first panel to get ready and please unmute Mario Nava. I can still hear him.
Chiederei a Anna Maria Romano di
I'd like to
Europa
ask Anna Maria Romano from Uni Europa Finance, if she's with us, to unmute herself. Here I am, Giulia. Good morning, good morning. Well, I would like to put up the slide to present the panel, but I will leave this task to you. So you will introduce the panelists for this first panel and get started with it right away. Good morning, you all. Thank you very much, Giulia, not only for handing the floor over to me, but for organizing this event. A very important event. We heard from some distinguished speakers, and we have a few more to come along. I'm here in my capacity as Vice President of Uni Europa Finance. That's the European Union of the finance sector, representing 1.5 million workers of this sector throughout Europe. So the panelists today are Davide Lombardo, Policy Officer from the European Commission, Francesco Masala, who's Chief Economist of the Italian Banking Association, ABI, Antonio Pinto, who's here on behalf of Mara Colla from Consumatori. She couldn't attend. And Andrea Baranes. Who represents the Fondazione Banca Etica. It is a very interesting panel with some distinguished speakers. And our panelists have definitely a lot to share. And it is not by chance that this panel is so rich. I'm saying this because we are addressing a topic which is very topical right now, as we heard from the previous speakers. Today, more than in the past, we have to come to terms with the effects of the pandemic, and we have to consider the question of the NPL and over-indebtedness. Banks have been mentioned, not as the protagonists of the crisis that broke out in 2008, but they are part of the solution this time with the lines of credit they have made available. But we have to understand how to address the future, because NPLs, so loans that are not going to be repaid or that are not performing, account for 256 billion, 385 billion if we consider some likely default. So we are witnessing an increase, a progressive increase in consumer credit, so daily paid loans. And then behind all this narrative, there are people behind every loan, behind every non-performing loan. There are people that are non-performing people, non-performing lives. After 2008, we have seen that NPLs were considered as balance sheet items that had to be carried over or had to be sold as a financial product. To the extent that they could be written off the balance sheet of a bank to be recorded in the financial statements of another entity. This way, these NPLs, rather than being recovered or restructured, have been transferred somehow, even when a different organization of the system might have allowed for a partial or total recovery. Then you all know what happened after 2008. It was a tricky situation. Mario Nava said that, the European Commission and all of us have worked together to have a different legislation to make the financial system more resilient. But future NPLs won't be the result of a financial crisis, but of the pandemic that will lead to a different sort of crisis. Income loss, job losses, and some increase in poverty, as we're witnessing already, along with an increase in savings, but concentrated elsewhere. And we must not forget that this is mirrored in the lives of people. I'm sorry for talking at length but speaking in such simple terms. I'm doing this on purpose because I believe that it is our task to try to simplify matters, or to simplify at least such a difficult matter. We should never hide behind technical words or technical jargon. We wanted this panel to represent any possible side of a very complex question, because the underlying question is, how can finance, how can the banking system, along with those who regulate it, those who work in it, along with the whole public, how can this system be an instrument for an economic model that puts people at the center? Because this is what we are talking about. Every time we talk about questions that seem so distant, so complex, like finance.
Noi pensiamo che sia un lavoro, un'organizzazione del lavoro diverso. We
believe that it is a different work organization. Well, a different work organization can be an instrument to obtain a fundamental result, that of bringing NPLs down, to prevent NPLs to prevent NPLs from being handed over to other businesses without trying to solve the problem. We should think about mitigating economic difficulties that are causing such arrears. In order to do that, specialists should work on an active management of credit, and this includes the creation of new qualified and qualifying typologies of work with people that try to help businesses and enterprises and individuals to redress the balance of their budget as soon as the first difficulties arise. This way, we want to avoid the creation of new NPLs, and we would make sure that in a situation of constant manifestations of excesses and surpluses in terms of labor, we stick to the idea of transforming the idea of workers in a different manner. And this has a social purpose towards the people that are helped, or towards the vocational qualifications that are created. This has a value also from an economic standpoint for businesses. It is a system that works if everything else works. But our distinguished panelists have to rise up to the task of addressing this question. We are all protagonists of this scenario from different viewpoints. So it's up to them to think of how to think of a different development. And I'm referring to the word development specifically without mentioning the word growth, which is something that has to do with numbers only. So we have to think of proper development that helps people develop, rather than seeing inequalities grow exponentially, because all of us who are attending and all the panelists who have accepted this invitation know something. We can't be saved on our own. So what we have to do is to make the most of our knowledge, make the most of our expertise, make the most of our hearts to build something different. So I will start by giving the floor to Davide Lombardo. We asked for regulation, so I will give you some 10 minutes each. And of course, we are going to have some time left for questions. So Davide Lombardo.
Dal punto di vista di chi sta nel cuore della legislazione,
please tell us something about a possible strategic change from the viewpoint of those who are making laws. I'm referring to the European Commission and, of course, strictly to the question I've just mentioned. Please, Davide. Thank you. Can you hear me? I think you can hear me and see me as well. Very well, thank you. First of all, I would like to thank you for the kind invitation in participating in such an important initiative. I'm Italian and I work for the European Commission, and I'm very pleased to give my contribution, and I'm trying to do this at best, so contributing to the success of this initiative. This panel is very timely. As already said by your Secretary-General, I don't know if the Commission has already published a statement on the strategy proposed for NPLs, which is the subject matter of our panel today. Anyways, I will try to give you an overview with respect to the background of this communication, of this statement, to provide some food for thought also for the other panelists. As we heard earlier, we are in a very different situation with respect to what happened 10 years ago with the global financial crisis that broke out in 2008. Thanks to the commitment of the banks and thanks to the support guaranteed by regulations and regulatory measures, and thanks to the support of organizations like yours, the liquidity and asset situation of the banks is very different in this case, and has helped, as my colleagues said, but also the crisis is very different and looks very different, meaning that this crisis was really unexpected. Some might argue unforeseeable, and it is a crisis that hit everyone. Individuals, businesses that are having trouble or will have trouble paying back their loans. These individuals, these enterprises are not the ones who made speculations that in hindsight might have proven to be excessive or exploited the financial leverage too much. These consumers, these businesses were leading a normal life, and they were hit by an unexpected event. And so the primary needs to preserve our health have induced the governments to take unprecedented measures. And this is something that must be stated very clearly by way of introduction. to understand the impact of these NPLs, to understand the impact of the crisis, the incidence of this crisis, as we say. This being said, we must also point out that the NPLs of the previous crisis were about to be disposed of. But according to our estimates, NPLs will rise again, especially once the exceptional measures that have been adopted by the individual member states are lifted or come to an end or expire. I'm referring in particular to the moratoria that were recently introduced. So we should truly address a potential increase in NPLs. The Commission is looking with some concern at this potential event for two reasons. First, because as we just said, this is the symptom of a crisis that was very deep and that is having and will have very deep repercussions, and we must all try to minimize them or mitigate them. And secondly, because our role is that of dealing with financial stability and create the conditions to make sure that a recovery can take place. So to go back to a better growth, hopefully, and in the shortest time possible. So from this viewpoint, from the viewpoint of financial stability, but also in terms of the conditions to go back to regular growth or rapid growth and development, which means per se helping and supporting individuals and enterprises that are in a pretty bad shape. It is important to make sure that banks can truly support their economic activities rather than being a bottleneck, as it happened immediately after the global financial crisis of 2010 and 2011. So this statement that has been announced today is basically providing three different lines of action. First, to improve the functioning of the secondary market of these NPLs. To look for a standardization of national insolvency proceedings and to clarify the purpose for the creation of the so-called bad banks, that are banks managing assets that in general might be potential instruments for banks to be more efficient in terms of managing NPLs. If you want, I can go into the details of these individual measures. I'm sure there will be questions, but what I would like to stress right now is just a couple of points. First, this strategy that is being proposed, and as usual, it relies on the actions of the Commission itself, but above all of the co-legislators of the Parliament, of the Council, and associations like yours, tends to create opportunities, so possibilities rather than obligations. To go back to what was mentioned in the introduction, if we want to improve the efficiency of these secondary markets of NPLs, It doesn't mean that we want to help banks use them, but we want to make sure that if the bank have to use them, they can draw the maximum benefit from them, so that they could reuse such funds in a more efficient manner. The second point I would like to stress regards communication, regards the statement itself, that is based on the concept that the protection of the rights of the debtor is sacrosanct. With the directive on mortgage loans, it was already set out that the rights of debtors must not be sacrificed in case the banks decided to transfer their credits to a management company. So I would stop here. But just to wrap up with what I just said, the Commission is concerned about the increase in NPLs. It is going to release a statement today, which is the fruit of a few interactions over the past few weeks, over the past few months, with the different stakeholders involved, with the different population brackets involved, whose aim is to create some new instruments or to improve existing ones, to make sure that the management of such loans is more efficient, more timely, and at the same time helping banks to contribute to recovery when this is hopefully going to get started. And I will stop here. Thank you, Davide. Thank you for being so clear. Thank you for sticking to your 10 minutes. But these are such interesting topics, and each and every one of them would deserve an entire day. I will now hand the floor over to Francesco Masala. He represents the Italian Banking Association, so this is a very important stakeholder. He represents businesses, and as we already said, what we are imagining is an unprecedented covenant, is an unprecedented alliance, overcoming every form of opposition to find solutions and put forward proposals that go in the direction I've described before. So we don't have to hide behind big words, bombastic statements. We shouldn't find excuses, or we shouldn't believe that we can work around on our own. Our will is to cooperate. So my questions for you is how to address the situation in the most proactive way. So Mr. Masala, 10 minutes for you. And I'm sure there will be questions for you as well. Thank you. Good morning to all the participants, and thank you for the kind invitation. For which I thank on my behalf and on behalf of the Italian Banking Association. Well, thank you for your question. While introducing the panel, you raised some interesting points, but let me stress, if I may, that mutual support and cooperation between the Italian Banking Association and consumers organizations is very relevant, because the opinions of our clients matter. So the exchange we've had over the past few years, I think bears witness to this. We have a dedicated division in our organization that is responsible for relations with consumers organizations. And this is precisely in the spirit you were mentioning earlier, so a mutual cooperation and mutual support. Just a few remarks with respect to what you said. You talked about simplifying such a complex question like finance. Well, I fully support that. But it is actually a pretty complicated world, a pretty complicated sector, and too much simplification might risk giving a bogus representation of what the reality is or what the role of banks is, supporting individuals and supporting households. And I'm saying this because the banking sector is maybe the industrial sector that is the most regulated of all. And understandably so, because the objective of banking is, well, intermediation when it comes to savings of individuals, savings of households. That is why regulators pay great attention to the role that the banking associations play. And this, of course, can have a negative repercussion in terms of the relations between the banks and the clients. This being said, I will try to be short and concise and stick to my 10 minutes. We've heard this morning already. Let me just give you an overview with respect to the state of play of banks, how the emergency has been managed, and what are future prospects, what's the future outlook. Well, the Italian banks have addressed the crisis caused by the pandemic, starting from a much stronger base. And I'm referring this in terms of assets. The 1PT ratio is now 15%. It was basically a half of the beginning of the financial crisis in 2008. So the position is very strong. Also, when it comes to the quality of assets, things have improved considerably. NPLs have decreased since 2015 to 138 billion gross without considering losses, and the starting point was 350 billion in 2015. This number represents the residual potential risk, and this is only 67 billion. This is just to provide you with some facts and figures, because what we heard before has to be further clarified in terms of numbers to understand what we are talking about here. So as I said, the position of the banks was much stronger this time round with respect to the crisis that broke out in 2008. Of course, this doesn't protect banks from the consequences of this crisis. And as Mr. Nava said already, this time, banks, in my view, have been correctly considered as being part of the solution of the problem rather than the cause of the problem as it happened in the past. This is true. And this is confirmed by some numbers I would like to share with you. Numbers that regard moratoria that have been granted to freeze payments at the request of associations, thanks to the cooperation with consumers associations, but also with the entrepreneurs or associations, and also as a result of the decree that was passed, the Cura Italia, the Save Italy decree. So the data I'm mentioning refer back to 27 November. So the applications to freeze payment have been 2.6 million, 1.5 million from households, 1.7 million from businesses. Total loans that have been frozen account for more than 300 billion euros, so that's huge. 97 billion households, 195 billion businesses. the same time, banks have issued guarantees to businesses for a total amount of 115 billion euro regarding 1.48 applications, as I said. And finally, we've got some 18 billion of loans guaranteed by SACI. So it's a huge effort made by the banking system, because of course, freezing payments is a form of support to individuals, to households and enterprises. It is definitely useful in such a complex context. But it's also the lack of revenues and profits that has been recorded as an impact on the situation of banks. It is a very complex context right now. I'm referring to the pandemic. And the banking sector was already going through some change due to the macroeconomic framework, so a very, very low level of interest rates applied by banks, which determined a reduction in the profit margins for banks. Just to provide you with some facts and figures, profit margins on commercial activities and lines of credit is equivalent to 1.78%. It was 3.35 more or less before the financial crisis. So there was a reduction in profits caused by low interest rates. This is a challenge that will continue for some time. And banks should, of course, make up for this reduction in profit margins. And the other big challenge is digital revolution. And banks were addressing this before the pandemic. So the need to change their approach and to make the back office activities more efficient. It was something that needed investments. And so this implied costs for the banks, especially economic costs. And this has been made worse by the pandemic. In this respect, in the first lockdown phase, banks have guaranteed continuity of service. So they've kept working in a context where rules, as you might know, have imposed constraints on the possibility of distributing dividends to their shareholders. And this, of course, has had some consequences, because evidently banks are called by regulators to increase their capital, so to be attractive potential shareholders, or obtain profits to generate internal capital. So to have this generation of internal capital through year-end profits. This is a variable for the bank to grant loans to their clients. So by reducing dividends to be distributed to the shareholders, banks have been less attractive. This is the first example of how regulations can have an impact on banking activity and indirectly on relations between banks and clients. Let's talk about future outlook. So the management was good on the part of banks. Well, future perspectives are extremely difficult to anticipate, with some accuracy. First of all, because this crisis was unforeseeable. It is something that historical experience didn't help us with. It is a healthcare crisis. We believe, and we're very optimistic in this sense, we believe that once found the solution, so the vaccine, the recovery, the economic recovery of households or businesses, and you know that the fate of households and enterprises is very much linked. We tend to separate these two sectors, but the households are the expression of those who work, basically, so businesses. Anyway, recovery should be very fast once we found a solution to the problem, i.e. the vaccine. We see that also in the economic data of the third quarter. Change in GDP in Italy was extremely positive after a sharp drop in the second quarter due to the lockdown. I apologize. Sorry for interrupting. Could you please conclude?
It is very important that in this framework, the regulator is not penalizing banks. It is important to have new rules in this moment. And of course, it is important to consider that the customers have to be supported, and mainly when it comes to the classification as non-performing loans, because the class will be determined not only in terms of non-payment for over 90 days, but also, for instance, the revenues that have to account for like 100 euros for families and households and 500 euros for companies. So what we are asking now to the regulators is to take all of these framework of crisis into consideration and to keep in force all of the measures adopted so far, which have had a good level of facilitation of relations between banks and customers. So now I give the floor to the other speakers. Thank you. Thank you. Thank you so much. It's clear that we have to think about a different type of banks in terms of models. And if there's one thing that this pandemic highlighted is that, of course, all of those that work in banks have been heavily involved in these activities on a daily basis. So now I would like to give the floor to Andrea Baranes, because we have the Banca Etica Foundation that shows on a daily basis that there's a different way of carrying out banking activities. And I'm always impressed by the low number of NPLs that this bank has, because it's a company which is profitable, and also they carry out a normal, let's say, banking activity, but they do that with a different approach. So the floor to you, Andrea. So thank you. Thank you. Thank you, Emilia-Romagna, and thanks to all of you. I would like to refer to some of the items that were raised by the previous speakers, and in particular, the NPLs and what we are trying to carry out as Fondazione Finanza Etica, also thanks to Final Watch. Everything is linked to NPLs and new banking rules. And what is important now is financial inclusion, that is to say, the difficulties that might be reflected on citizens and enterprises. And as Banca Etica, in the last few days, we carried out a survey on financial exclusion and on the difficulty to access credit. What comes out is that there's an increasing financial exclusion in the poorest regions of the country, and also a drop by 2 or 3 percentage points in the last few years. Another survey was published in this day by Libera, showing that there's an increase in the usury in Italy, because when people are excluded from official credit activities, they resort, of course, to the usury. And Libera refers to 100,000 companies that have liquidity problems. So we have a situation of over liquidity. And in the last few days, the International Financial Institution talked about a global trap, a global liquidity trap, and an excess of money which is not allocated where needed. So against this background, many measures were deployed and many worked. But they look like buffers, like credit moratoria or the liquidity. But what's next and what's going to happen in the next few months if the credit moratoria are not renewed when they come to their end? And this is something that was also mentioned. And the worst case scenario, there will be a lower liquidity, so very low rates, but a high risk for the situation of uncertainty within the economy. So a problem of profitability for banks, and also a problem of risks to affect consumers and crafts and low enterprises. Also, in consideration of the new regulations that will come into force as from the 1st of January relating to provisions and defaults, hence banks will be even more careful when it comes to provisioning. So when we have those that have a high risk of financial exclusion, then not to mention, of course, those that are already considered as, of course, not eligible for getting loans, well, the situation will be even worse. So the issue and the solution of securitization is not that solution. And the risk, besides deploying risky tools, is that of shifting the difficulties from banks to companies and citizens in a moment in which, for instance, all of those credits, somehow in the end of those that can take advantage of the situation. So now we are in a paradoxical situation. And sometimes as a foundation, we go to schools, and when they ask me what is finance, I say the money market. Demand, supply, they meet on the money market. On the demand, on the supply side, we have too much money. And in fact, we have, for instance, very, very low rates. Those that have money don't know how to invest money. And also investment funds and pension funds are moving towards high risk solutions. But on the other side, there's a financial exclusion, there's a limited access to credit. So of course, we don't believe that this is the solution, as well as another issue which involves us is the further concentration of banks, not just in terms of banking biodiversity, that is to say, several models that may meet different needs within the territory, but also because the rules are very often one size fits all, and therefore they are tailored according to the large groups, so we risk to lose the peculiarity of banking groups. And as Anna Maria said, the model of Finanza Etica showed that we can operate by reaching those that are excluded, the weak ones, those that cannot avail themselves of the banking services, but with a number of rates which are sharply lower than the average of the banking system. So the idea is that a different financial system and banking system works and works well. And if you allow me, a very last thing I'd like to mention relates to the approach being adopted recently when it comes to sustainable finance in the EU. So the sustainable finance agenda of the European Union, which is very good from some standpoints. And in fact, Mr. Nava was mentioning the importance of acting immediately when it comes to the climate issues and environmental issues. But at the same time, the definition is quite limited when it comes to sustainability, because based on our over 20 years experience, sustainable doesn't mean environment. We are slowly moving in terms of consultations in order to include the governance side and the social side, but we believe that sustainability is much more in the sense that if we talk about NPLs and over-indebtedness, and we talk about financial exclusion and access to credit, all of these topics are fundamental, especially in Italy. And we cannot talk about financial sustainability without considering the vacuum we have nowadays when it comes to the capacity of the system to react to the needs of our society. So when we have the increase in moratoria and financial exclusion increases and the access to lending, it's increasingly difficult. Well, talking about sustainability also includes considering speculations and short-term goals and targets, and to consider the possibility to access the credit. So, of course, page 1 in economics handbooks, well, they refer to these items, but we are definitely far from this aspect. So those that need money now, they cannot access, they're not able to access loans. They often end up in situations of usury, not just in the south of Italy. And then our sustainable finance is not taking these issues into account. And I don't think I have to insist on these items. When we see that BlackRock, which is the main investment fund at world level with huge problems, think about, for instance, the investments on fossil fuels, is appointed as consultant for financial sustainability in order to act as advisor to the European Union, well, then we have a problem. We do, because, and we're going to have a problem until we face the situation. And we have that this network, Finance Watch, allows to face issues that are not just affecting Italy, but which are felt in Italy, like financial exclusion and the situation of the weak. We have to bring these issues to Brussels so that they are incorporated and included in the legislation, especially when it comes to, for instance, financial sustainability. Because if we talk about financial sustainability and we don't talk about financial exclusion, and we don't talk about, for instance, inclusion 360 degrees, well, this is not a solution. I'm at your disposal for your eventual questions. Thank you. Anna Maria, you are muted. Oh, sorry, I could not switch it on. Okay. Thank you, Andrea. Thank you so much. So now, Antonio Pinto, you are a lawyer to the service of the people. So are we sure that the legislation, that we have an overlay, let's say, legislation now? Because if consumers need a lawyer, maybe there's something wrong. So can you please shed some light on the situation? Well, I wish to thank Finance Watch for organizing this conference. And I also... Antonio, I'm sorry to interrupt you, but your volume is very low. Could you please check your microphone? Is it better now? Not much. Yesterday in our checks, everything worked well. Then scream. All right. I'll speak as loud as possible. In the report submitted by Mario Draghi and other economists yesterday, it is stressed that global economy is on the brink of a cliff, and there's a great risk of having situations of people excluded from the access to credit, with all of the consequences in terms of poverty deriving from it. This is a real risk, but we have to say that as from the 1st of January, there's the perfect legal framework so that this happens, also following the coming into force of the new rules for the definition of default and NPLs, because these rules set parameters based on which banks are going to be forced to classify NPLs, and therefore, and consequently, banks shall not renew the lending, and in case there are negative situations and with negative impacts on companies. And so These new rules set strict rules and criteria versus the one that's adopted so far by Italian banks. With the new rules, the threshold in terms of, for instance, NPLs, and exposure is automatically classified as a default when it exceeds 90 days. When it exceeds the threshold set, including, for instance, 500 euros, and even, for instance, including 1% of total debt. And in case of individuals and natural persons or SMEs, the amount is set at 100 euros. Another new rule is the calendar provisioning, which imposes on banks a very short timing and, for instance, even higher quantities when it comes to provisioning. So this situation cannot be negotiated by each single bank. And the possible scenario is that for companies and households, there will be a turn of the screw when it comes to the debt, because banks will issue less financing to subjects that are not clearly sound and credit-worthy. So there will be a sort of situation and paradox when the bank gives you an umbrella when it's sunny and it asks for the umbrella back when it's raining. So however, and paradoxically, these rules are detrimental for banks as well, because they force banks to huge provisioning. So in case of NPLs, and they block capitals because all of the portion that can be allocated is then devoted to, for instance, profitability. And secondly, they will generate far more NPLs than today and more losses for banks. Thence, with the need for recapitalization, that they are going to be very difficult in this moment. So this is the reason why this is a strange historical moment in which consumers associations ask regulators for the same thing that banks are asking for, and which is somehow unprecedented. That is to say, rules have to be lifted now and be deeply amended. Otherwise, we're going to have a desertification of the productive tissue and also and the productive fabric. And there will be and the first rule to change is the one based on which, also in case of, for instance, renegotiation of the lending, in case reorganization that exceeds over 1% of the initial value of the credit, well, it has to be reclassified as NPL. So for those that, like me, deal on a daily basis with that restructuring for companies and households, it's clear that this rule is terribly detrimental for any chance of recovery of companies or individual or natural person steps. And it's negative for balance sheets of banks as well. So it's not helping anyone. It's just helping those banks that buy the NPLs at a very low rate, and then they take home 50% by having an interesting margin for their shareholders. That's it. So what are the solutions? When it comes to the technical solutions, I don't linger into the details because we would need a separate and dedicated conference. I would just say that the first solution is a cultural one. So we need to fight against the idea of considering the economy and finance as a cold science and to separate it from ethics. We need new paradigms to be included and enforced. And I am a supporter of the generative economy mentioned in Assisi by Pope Francis a few days ago. The present economic approach says that the change comes from the invisible hand of the market and the hand of institutions, whereas the hands through which you can obtain change are four, not just two. You also have to consider the hands of the active citizenship and also the responsible companies. You cannot be happy unless you deal with others' happiness. So in the economy background as well, you have to establish a company, you have to take care of it, you have to accompany it, and then you have to let it go. We need new indicators to check the soundness of the financial and economic policies. And we have to reiterate demonstrate that the value is not given by the GDP, rather by the set of cultural, relational, and environmental values that a community lives in a territory thanks to the economic system it endowed itself with. And these are clear indicators in terms of demographics, economics, a number of startups. So social indicators like number of cooperatives and NGOs, or generational indicators, like, for instance, the assessment of the activities carried out by the elderly. So the active aging, or also the fight against, for instance, the young people which are not in employment and not in education. So, of course, the approach has to be also assessed through the way in which citizens decide to buy. Citizens should buy from those companies that are, for instance, fair trade and equitable ones, and also they have to support the finance that promotes, for instance, products that comply with the ISG requirements. If citizens understand that the market is made up of demand and supply, they can really change the situation through a bottom-up approach. And we can, of course, leverage on the power of citizens and consumers. And sustainable finance is too elegant. We have to say finance which is detrimental or non-detrimental to people, because this is the clear definition. We have to define new ends and new purposes, and then we can define the new system. So, for instance, if we see that the GDP increases, then we say that the economy is performing well, but for whom? So, if we have an increase in the number of poverty and unemployment, the situation is not good. I like to quote the Peace Laureate, Nobel Peace Laureate. We have to change the rationale of private finance. The finance now is linked to degradation, concentration of wealth, increase of poverty and employment, whereas the end of finance has to be the 3 zeros: zero emissions, zero concentration of wealth, and zero unemployment. Thank you for your attention. Thank you. Thank you so much. We have 4 minutes left, and I'd like to immediately give the floor back to Julia. And what I like to stress at the end of this, let's say, panel, is that, of course, 1 hour is not enough. We definitely have to talk about this topic by giving it more time. And I have some problems with the mic, with my mic. And I ask you to please speak in these minutes left. Oh, no worries. No problem. Okay. Good morning, and sorry I didn't switch the video on earlier on. I wish to thank, of course, the panelists. And what I like to do now is to spend a couple of minutes to allow the next panel to take the floor. And now the moderator is about to step in. So I wish to thank all of the speakers from the first panel, because you were timely and wonderful. So thank you very much for that. Thank you. And unfortunately, we could not have the long Q&A session, but as Anna Maria said, this is a very, very important topic, and we need to organize another occasion for that. So we really need to analyze the situation in Italy. So I'm just checking for a few seconds that the next panelists are ready. Thank you.
Ok, allora eccoci di nuovo, dovremmo
Okay,
essere
so here we are again.
con Antonio Longo.
Antonio Longo. Okay, I hope you can hear me well. Okay, let's start with the second panel that deals with three main words: sustainability, tax policy, environment. So as a matter of fact, there's a common thread that groups these words. And over the last few months in particular, sustainability has certainly been part of the current affairs and the political debates. So we talk about sustainability whenever we talk about climate, but also, for instance, financial statements, and we talk about sustainability when we talk about consumption. We talk about sustainability at the tax level. So before starting with this panel, I had a look at the press and press articles in the last few days, and I'd like to share with you some headlines. For instance, in Il Sole 24 Ore, climate, an appeal by the UN, and that was the heading. And then another portion of the page said, oh, okay, environmental safeguard. Then another newspaper, Rifkin, a long interview to the famous environmentalist and economist member, the green challenge will be positive for the economy as well. So somehow, this is the dilemma now. So a more sustainable environment and a tax policy that may somehow push towards and lead to this choice, or is it rewarding activities that cause problems to the environment? So these are the main topics we're going to tackle in this panel. And I'd like to introduce our panelists: Giulio Marcon, spokesperson of the Sbilanciamoci campaign; Rossella Muroni, a member of the Environmental Commission of the Chamber of Deputies, former national president of Lega Ambiente; Monica Di Sisto, vice president of Fairwatch; and Elisabetta Mercaldo, representing FABE. I would like to start now with Giulio Marcon, and I'd like to ask about his feedback relating to this dilemma. That is to say, those that refer to environmental policies and environmental protection, some say that this can somehow hinder the growth. And Rifkin tells us, no, the green change will be a winning thing for the economy as well. All this is conjugated, of course, with a sustainability for citizens and a tax sustainability and economic policies that shall be alternative ones. So, of course, this has been part of the debate in the last few weeks. And also sort of alternative option and an alternative budget law. So please, Giulia, good morning. Good morning to all of you. Yeah, okay. Sbilanciamoci last December submitted our, let's say, counter budget law. And we actually develop our proposals, and we develop a sort of analysis, and we make some proposals in order to have a different budget law inspired to values and principles and the goals of peace, environment, solidarity, and justice. So in this, let's say, alternative budget law, we highlighted a number of aspects which are fundamental in our opinion, and which concern the prospects of growth and the future of our country. So the pathway leading to sustainability is a must. This is not cost, this is investment. I mean, this is the only alternative we have, also because what is happening in the last, what has been happening in the last decades to our planet forces us to opt for this pathway, which allow us to save the planet, but also to develop human and social relations that have to be just. And now we need consistent choices. We have to avoid marketing, and this has to, this shall not become a sort of embellishment, because we had 40 years of liberalist policies that caused damages, not only to the environment, but which increased inequalities and poverty. And of course, they increased the imbalance in our economy and of international economy. So we have to step in now. So a pandemic questioned the policies we had, the austerity approach we had. The pandemic somehow helped us to understand that that Europe has to promote debt in order to allow development. We've been telling this for 40 years, and we needed such an emergency to allow Europe to make choices that we were somehow proposing in the past. And of course, Europe over the years invested on other situations like the depreciation of the labor market. Europe invested on the reduction of public spending. Europe invested on the value and the ruling, let's say, of the market. And we've been telling so for a lot of time now. We have to make a U-turn. This is done with choices, with concrete choices, with a new budget law. So Italy adopted something like 4 or 5 budget laws because the total amount of the spending that we have deployed is such that we actually passed several budget laws. A few things were good, and of course, many things had to be done and many decisions had to be made, whereas other choices continue to follow the old-fashioned pathway. And probably it will be somehow important to make choices that really turn sustainability into the pivot of our new economy. So this is something that the EU is telling us, but then we have to implement all these options. And we have to adopt cross-sectional, let's say, choices like tax and health, etc. So this has to be a sort of a test for all of us. So of course, it is wrong, in our opinion, what the government did. Is to say, the government gave, of course, support to companies without conditionality, whereas individuals, when, for instance, they ask for money, the huge amounts of checks are carried out, and for instance, the various taxes like IRAP, well, it's been somehow lifted. Also, in case of those companies that took advantage of the crisis, that took advantage of the COVID situation, like, for instance, the companies operating in the area of logistics. So, of course, this is a negative thing that refers to a sort of a multi-year deficit in our country because we don't have an industrial policy. Why don't we have it? Well, because we believe that the industrial policy is done by companies. Well, this is something that is not just affecting Italy. But the thing is that sometimes we provide, for instance, tax inducements to companies, thinking that then companies would invest, but companies didn't invest because, for instance, the inducements were used to exacerbate the accumulation of profits, or they invested money in financial speculation. If we are in a situation in which, for instance, Germany, like Volkswagen, is manufacturing electric vehicles, then this is not happening in our country. So Fiat, well, we've helped and provided support to Fiat for decades, but then when it comes to electric vehicles, it is the black shirt in Europe. Or, for instance, we talked about the increase in the environmental efficiency of our homes. We had some important incentives, tax incentives for solar panels or photovoltaic panels, but then we are importing panels from China, from Germany, from the Netherlands. So if we had an industrial policy, well, it should put together the incentives given to the right consumption and an industrial policy that asks Fiat not to manufacture SUVs any longer, but rather to manufacture electric vehicles or even solar panels and other, let's say, assets that we need to provide sustainability. The same goes when it comes to sustainability and mobility, because, for instance, it would be fundamental for our public transportation, but then in the different factories, manufacturing sustainable means of transport, they shut down, and we are buying these vehicles from other countries. So I come to my conclusions because I guess we have a limited amount of minutes, but we have to reason on these aspects. We need an industrial policy which has to be a public one and which is somehow managed in a suitable way and which is endowed with the necessary tools. We don't have to leave the goodwill of companies to make these choices. We need a tax policy that goes towards this direction. So I remind you that, for instance, we are spending 19 billion euros for subsidies which are environmentally detrimental. And in the past budget law, we set up a committee. We were told that there were going to be huge cuts in the subsidies provided to polluting companies. And now in this budget law, nothing refers to this specific approach. So in my opinion, we have to actually make a sort of clear analysis of the situation as it is happening for associations like WWF that are part of Sbilanciamoci and which are part of the counter financial budget law. Public investments are fundamental. Over the last decades, we had a very low percentage of public investments. So the problem is, if we have to invest, then we have to decide on how to invest money. So the European money is fundamental for us, but a few weeks ago actually, in the budget paper, we read the public investments we're going to have from today until 2035. So out of the 140 billion euros, 36 billion will be for the defense. So investments for weapons. So 25% of the resources allocated by the government. This is not possible. This is not acceptable. And then in the same document, you see that the money allocated to education and healthcare is less. So in 2021, we're going to spend 6 billion euros for weapons. And for instance, bombs and patrols and tanks, etc. So what we asked as Sbilanciamoci is to introduce a moratorium, saying this year we're not spending 6 billion euros for weapons, rather this money is given to schools and hospitals. So this money has to be allocated to education and healthcare. So these are the initiatives we are promoting in these days, and we are trying to be heard by the parliament and the government. Thank you.
Thank you, Giulio. You've heard that that's a lot at stake. Also, when it comes to the choices of our government, of our ruling class, of our policymakers, Marcon has mentioned the business world, the choices in terms of industrial policies and budgetary choices. Let's now move on to Rossella Muroni, who's interlocutor from policy making. She comes from the environment world. She was a president. She was president of Legambiente. She's the former national president of Legambiente. And now she has moved on to policy making, to decision making. So Rossella is currently a member of the Environment, Territory and Public Works Commission. So a lot of things we should work on for that green transition, for that alternative that was claimed by the President of the Commission, von der Leyen, when she launched her program. I have a question for Rossella, starting from something I read on Repubblica. houses, transportation, and hydrogen in a 74 billion plan. 37% of funds granted by the Recovery Fund have to be spent on environmental policies. So, Rossella Muroni, what's the role of Italian policy making in this scenario?
Stella, scusami, ti fermo subito perché funziona il microfono. Provo a parlare adesso?
Non
Perfetto.
funziona il microfono. Her microphone is working, we can hear her. That's the digital divide of Roman peripheries. Joking aside. So I'll try to give my viewpoint as an MP who has confirmed the trust in the incumbent government, but with no decision-making power, really. Well, I believe that in this country, what is truly lacking is a political culture that can really understand the revolutionary power of the questions we are addressing today. The Green New Deal, sustainable development, these are now buzzwords. We often hear policymakers use these words, but my impression is that they are not aware of what these words mean in terms of radical choices to make, in terms of speed of choices that have to be made. Because if there's one thing that we have learned is the importance of time. We environmentalists have always believed that we have borrowed the planet from our grandchildren. And we always had very clear in mind that everything that is happening in the present time has repercussions over the future. So the acceleration that was given by environmentalist movements is to make people understand the urgency and the importance of the measures to adopt. But we need radical choices to make. For example, our country has submitted a national plan for climate and energy to Europe, and gas is not a transition form of energy, but it's a stagnation form of energy, because when you put all that money and all that resources in an instrument like the capacity market to basically build new gas-fired power plants, it means that we are lagging behind, because we, at the end of the 1990s, already talked about gas as a transition energy. So doing this in 2020 means that they haven't got a clue about the pace they have to keep up with to rise up to the climate challenge. And this means a new economic model. That's what I mean when I say radical choices. It's not enough to change the carrier or to change the type of energy or the source of energy. I think the real scope of climate change is a social revolution, an actual social revolution, because in the so-called circular economy, citizens stop being merely users and consumers, unaware consumers, because this is what linear economy asks us to do, because it means that I have to consume without being aware of where the food I eat comes from. The least I know, the better. Whereas in circular economy, citizens must be fully aware, starting from a very simple separate collection of waste that, if done right, helps me provide secondary raw materials. And think about how important that is in a country that is so poor in raw materials like ours. And it gives me the opportunity to be a producer as well. So all this social and cultural revolution is nowhere to be seen in policy making. And I'm saying this with lots of regret, but also with some respect, because when I hear about control rooms, where there are managers that are given this role as leaders. And Prime Minister Conte has also started a debate on the governance of the recovery plan. So I think there is no such a thing as men and women, especially men, if you allow me, that are good for all seasons. There's no one size fits all. It can't be the policy makers that have led the industrial phase, the fossil fuel phase, to lead this new era. We need a representation of the economic world that is willing to emerge, but there's no room in our country. There are lots of innovations in terms of technology, in terms of solutions, in terms of patents that are granted in Italy, but they have no right to citizenship in Italy. That's what I usually say. And such technology is very often neglected. Marcon mentioned the super bonus on energy efficiency. Well, for example, patents for the construction sector, for new sustainable materials coming from waste are all Italian. But sadly, we have no law creating a link between incentives and the use of such materials that are Italian products. So we need a good sovereign attitude towards the soundness of the patents we have been granted. Well, joking aside, I think there's no awareness. So when we think about Italy, we think of INI, we think of NL, but from the energy standpoint, there are lots of things to do, starting from energy communities. With respect to radical choices that are needed, and I'm saying this with great conviction, I think environmentalists should take a step forward too, because I've seen that big associations in this field have taken their stances. If we want to avoid that Italy is clinging too much on gas and new gas-fired power plants have been proposed. So we must focus on wind energy, especially offshore wind energy. And as a circular economy and a zero-waste society, this means to create waste disposal plans. We should find a participatory model because, of course, in the circular economy and the economy of the future, we are talking about citizens will stop being users and consumers, but also they will stop being voters expressing their opinion every 5 years. They want to participate. And this, of course, will completely change the policy-making world. But let me tell you that it's very complicated to make people understand what's the scope, what's the stature of the challenge that lies ahead of us. It's a one-time opportunity, I think. And given the disappointing criticism that we have recently read about on the papers, well, it's not clear that we have a one-time opportunity here. First of all, we have to have a broad immunization program to make sure that all Italians get a vaccine against this virus. And we have to focus on the importance of resilience. Everybody mentions the recovery fund, but that's actually the recovery and resilience fund. We have to be resilient to address future crises in a different way. We need an adaptation mechanism to respond to future crises. And at this time, Europe is granting resources. Well, it's not something that is going to be mercifully granted by Her Majesty, the European Union. And as a whole question to address regarding the European stability mechanism. I think it is important to question the historical mechanisms whereby agreements between the member states have been entered into, because clearly they haven't worked so far, and only COVID-19 has challenged them. We must not forget about it. It's not like Europe has been willing to show solidarity overnight. COVID happened, and this is what it led to challenge and to question all the European mechanisms in place. Let's not miss this opportunity. I think we have to be a bit cross-eyed in this regard. So we have to look at what happens now, what is going to happen between now and 2023, and also to look at the far future. And we need the transformation platforms. So the 14 metropolitan areas, for example, are a place where to implement the recovery fund mechanism in terms of projects, plans, and solutions, because they should speed up changes. They should group together the highest number of people. And in the light of this, we need to challenge strategic nodes. For example, I've read about bureaucracy or red tape in the questions. Well, I won't accept the fact that parallel structures are built because the public system is not working. I understand that we need to be fast, that we need some speed in all the actions we take. So acceleration is very much needed. But at the same time, we must hire people. We must have a big recruitment plans of new people. And I might sound provocative here, but if we want to build something, we need engineers, we need land surveyors, we need technicians, but also sociologists for participation processes that understand what type of claims are made at a local level that accompanies somehow transformation and participation processes. This is a nutshell what we should do. What I mean is that we must take care of the public administration without throwing it away, because it is the skeleton of the social animal. And so sometimes shortcuts are needed to bend nature to our way of being a country. Just giving up any improvements and giving up any reforms we've been trying to promote for 20 years, well, we cannot do without now. Thank you. Thank you, Rossella Muroni, former president of Lega Ambiente and current MP. Let's now go back to associations that are involved in a different economy, an economy building a different society. So we will hand the floor over to Monica De Sisto, who's vice president of Fair Watch. So tell us about Fair Watch. What does Fair Watch do? And then we can address different fiscal policies, economic policies, or industrial policies, and how they can contribute, on the one hand, to build a more sustainable society that is more equitable as well. This is one of the important questions that you are trying to address. A few months ago, you have launched the manifesto for the Society of Care, but you also fought some very important international battles. Please, Monica. Thank you. First of all, good morning. And thanks for giving me the opportunity to elaborate on some such very important questions. Fair Watch is a small organization. It is part of networks and is supporting networks with some specific competencies. It follows negotiations at an institutional level, and it is basically at the service of true practical things, because it is true what Rossella said. Basically, there's no knowledge, there's no recognition about everything that happens at a social level, but also at an industrial level. So the analysis we are making follows along the lines of the European Commission, the European Parliament, and it is just based on some key elements that, however, do not give an exhaustive picture of the whole sector. For example, let's think about the long seasons of cutbacks on social systems and services, and so we were left with our parents, grandparents, or children that were not self-sufficient and had no possibility of having their basic primary needs fulfilled, or didn't have the chance to carry out their usual activities. This is because there's no 3D knowledge of the Italian society and economy. And there are many religions and many slogans. One of the religions I've been practicing the longest is that of international trade, because it is true that export accounts for 1/3 of international GDP, but if we look at it, it involves 10% of Italian businesses, and those who try to follow down this path are actually break even or recording losses. Very few are recording profits. For example, with COVID, if the parent company has granted subsidies or support measures to the subsidiaries, well, the fall was the landing was so to say softer, whereas for others it wasn't that easy. They had to come to terms with a hard landing, and they were left to their own fate, without even mentioning the question of migration. Because in that case, when it comes to labor, everything is left in the hands of those who show solidarity. And it is mostly neighbors or regular people. And this is something cross-sectional to everything we heard today. So our participation is extremely important. Sometimes our role is not considered as contributory. I'm thinking of France, Spain, Germany, but everything takes place at a regional level. One of the pillars that have reinforced the surveys and the studies were precisely regions, whereas in Italy, we are dealing with watertight compartments, so finance, civil society, institutions, etc. So there's an impaired exchange, and therefore response is insufficient accordingly. What's the Society of Care about? Well, the Society of Care is an attempt at re-establishing a dialogue within civil society on more general terms. I'm referring to a vision whereby the paradigm of care is replaced by a new paradigm where relations between people or between communities, even at a global level, is guaranteed. So another form of active citizenship involving people from different countries, based on solidarity at the service of our country, for financial, political, and economic benefits. Antonio, you talked about taxation. We receive some bonuses to spend money. We have worked on the chapter dealing with economies based on solidarity. For example, With respect to measures that were adopted for specific business chains, for example, agri-industrial sectors have been supported, whereas eco-farming activities were not included in such support measures. And even for large purchasing groups or that belong to platforms, why small farms weren't helped? Why in many countries and many cities, I'm thinking of Rome, the first thing that was shut down were farmers' markets that were in the open air, and we left people lining up outside grocery stores. I think it would have been more productive for us to leave farmers markets open, because of course the impact is completely different. What I buy there is absorbed mostly by the producer rather than by the whole supply chain. We have realized that the long chains are the weakest links. Yesterday, there has been a very important meeting. There has been a very important meeting on imports. And people talk about imports as we used to do years ago. So it's just like watching an old movie. So reading press releases or hearing from the chambers of commerce of the leading exporting regions, Lombardy, Emilia-Romagna, Veneto. Well, people said, well, you are not considering the fact that small and medium-sized enterprises that make up our business environment, and most of them are in trouble right now. So there will be financial questions to address, questions that no one has asked so far. And those who have asked these questions have done it supporting a limited number of businesses, but there's very little left for business environment in general. There's even citizenship income in place for some VAT registration numbers. As already confirmed, by what some speakers said, I'm thinking of Andrea, Rossella, and Giulio Marcon. Well, civil society is to be involved, because the closeness with the territory, the emails that are not only emails, that are numbers, that are stories, that have supported investments that play a role. I'm thinking of the unions that operate nationwide. We have exchanged views with them for many years when it comes to international policies and national policies. I see in the chat box someone mentioning the common agricultural policy. Well, some environmentalists have been very adamant in confirming the importance of organic production. Well, this is something that's considered as pioneer projects elsewhere, and we're not given that much importance to that. Well, the National Recovery and Resilience Plan is just a booklet. I must be frank on this. If I showed it to my professor in university, he would have thrown it away, because that's ridiculous. Contents were really embarrassing. Well, this is the evident result of the lack of discussion. Well, I'm not complaining because we haven't been involved in the whole process, but unless we place more value on the depth and on the richness of the competencies that are available with our organizations, disintermediation leads to a ridiculous setting for our country. We had a couple of meetings with the European Commission and it didn't go well. Well, of course, the European Commission is already is pretty hair-splitting in what they do, but we might have done much better. Why can't we do this? And I will conclude by saying this, along with external constraints that we are all trying to stick to, in the funding treaties of the European Union, civil society is mentioned, unions, they have to participate in all the key steps at all levels for all the institutions that are part of the European Union, and they must not participate as dancers in a ballroom. They have to participate substantially, because with a proposal whose aim is survival and resilience, and the dissertation is so bad as the ones we've seen, well, that's a missed opportunity. I don't think that this opportunity can be missed, because it is an opportunity that is missed to the detriment of thousands of Italians. As Giulio said, the proposal we have to make is to address structured participation as a form of democracy. It's not something that has to be granted from the top as a concession. We have to open up this participation in a representative manner, in a consistent and reasoned manner, but we have to give our contribution. Thank you.
Monica, anche tu hai,
Thank you. Thank you, Monica. Well, there's a lot of food for thought here. And then in the second round of contributions, we'll see the reaction of the other panelists. So let's conclude this first round with Elisabetta Marcaldo, who is in charge of the contract the department of FABI. So I'd like to ask Elisabetta Marcaldo to provide us with some pieces of information relating to the activities they are carrying out in terms of sustainability and tax policies. We see you, okay, maybe you should, yeah, wonderful. We see you well now. Great. Good morning to all of you. Well, Antonio, as you said, well, sustainability is a hot topic. It's always been the case for the financial sector. And we believe that in an extraordinary situation as the one we are going through, it may take on even a higher level of relevance. Why is it so? Because the main step that the finance has to perform now is to support investments. But investments that are aimed at laying the basis for the future, not just aimed at supporting the past. So, of course, we are reshaping our values based on technologies, but this is also done in terms of the investment choices and also in terms of for instance, the specific risk we to take on while we make investments. And we need also sort of coverage and offsetting in terms of expected losses. So the green finance is somehow dealing with the present situation, also the impact for financial intermediaries, and important capitals were allocated for into sustainable activities. So we have stakeholders like banks, insurance companies, and public institutions, and this is becoming increasingly important because the green economy directly and indirectly involves over 40% of Italian companies. And if you think that SMEs are the core of the Italian private sector, nearly 4 million SMEs are presently operating in area now, well, our system cannot but increasingly involve investors in order to, for instance, increasingly adopt green tools. So thanks to green finance, it's possible to have an additional trigger in terms of activities for companies, and also think about, for instance, environmental protection, but also economic growth and employment. So why are banks so important? Well, first of all, because now broadening the access to credit may determine an increase of environmental investments and also an improvement of productivity margins, and also a growth in the long term. And secondly, the green finance falls within a national context, as I said before, which is mainly made up of small and medium enterprises, where bank lending is the main source of finance. So in Italy, we are lucky because we have a large number of financial institutions that support development, sustainable development in particular. However, on the one side, we see that in many European countries, banks and enterprises have a model of relationship in which there's just a reference bank, like Germany, for instance. Well, in Italy, conversely, we do have a series of multi-stakeholder approach. So in our case, for instance, we see on the one side a model that fosters and supports enterprises, but on the outside, it translates into an information asymmetry between banks and enterprises, and then so the risk is that of having a lower access to credit. So far, the Italian banks adopted a number of measures to finance the green economy. They have backed investments in clean energy, sustainable transports, and also, for instance, the reduction of emissions, and over 40 billion euros were invested in the green economy. And of course, I'm talking about renewable energy sources and waste disposal. However, many financial institutions still have to analyze a number of frameworks, like, for instance, environmentally friendly buildings. And in a moment of crisis, as the one we are going through, we cannot but hope for a higher involvement of financial institutions and investors, and to for instance, allow a higher level of activity to be promoted by the green finance. So this can improve the balance sheets of banks, which don't have to foster the growth of NPLs at the moment. So we need to see how the interest shown by many banking groups can translate into a higher involvement of small financial institutions. Okay, thank you. So the first round of opinions comes to an end, but of course we go ahead now, and I'd like to give the floor back to the panelists, and also on the basis of the suggestions provided in the various contributions. So go back to Giulio Marcon, and there's a question I'd like to ask him. So in this case, disintermediation, well, for many years, as from the governments in the mid-90s, the issue mainly relating to, for instance, well, this has been a strong item when it comes to the relations between politics and civil society. So how do you see it? How do you see disintermediation? Well, I'm very much concerned about it because disintermediation is part of a political culture that is a Caesar-like one. So the idea based on which there's a direct relationship between those that have the power and those that are represented by the people, and what is in between is simply skipped. So the culture of the civil society and the culture of active citizenship, well, all of this stuff is somehow, thrown out of the window. And for our country, as well as for other countries, well, this is terrible because our country has millions of citizens which are, for instance, part of unions and are part of, for instance, bodies, and we have a lot of campaigns and forms of mobilization. So saying that democracy is a democracy based on those that rule and not on those that actively participate in democracy, not just with elections, but also with their daily activity, well, this is particularly, wrong. And of course, this dates back to a long time ago, so back to the 90s, and the concept of disintermediation has then been part of the left-wing governments like the Renzi government, who, for instance, mentioned disintermediation and also a direct relationship with the social partners. And this is now producing, and it's already produced, a number of damages for our democracy, first off. So our democracy and for the idea of democracy that we need to have. And also a damage because this means, for instance, giving away the contribution of citizens. This means not considering the proposals that citizens can make. In fact, Monica De Sisto is right when she mentioned the plan that was badly written. Then if we look at the documents of the civil society, well, that is a sort of nutshell of in-depth analysis and contributions, because there are a lot of people that study and which analyze situations and which have a deep knowledge of the things they're talking about. So the issue, the topic of disintermediation is the clear evidence of a, let's say, sick democracy, of a vision of democracy which is completely wrong. It is a vision of democracy which may lead to authoritarian forms of power, and something which is somehow separated from the control of people. And also, for instance, even when we refer to the concept of populism, where the people is at the center and the people have a say. Well, this is a way for using democracy, for using the people. And from a merely idea of democracy, thinking that democracy can be somehow impacted by something which is recognized by our constitution, because citizens are free to organize themselves into unions and organizations or political parties, entrepreneurial organizations. So thinking that all this is eliminated, well, this means that we are not complying with the provisions of the constitution. Thank you, Giulio Marcon. So I would like to ask the same question to Rossella Muroni now, by somehow simplifying the question, because Rossella, you were somehow part of movements and then politics, but over the years, did you ever think that there was a sort of approach like, do not speak to the driver. Say, someone is on the lead and you don't have to interfere with what that person is doing. Did you ever witness that? The mic is off.
Non so se Rossella Moroni ci ascolta. Rossella?
Allora passa qualcun altro.
Mi sentite?
Ah, adesso
Yes,
sì.
we do hear now. Great. So this attitude is there, but not just that. I have to say that there's also a lack of awareness of what is happening throughout the country. A lack of awareness of how the relationship between citizens and institutions is tore, and citizens are not able any longer to feel part of something, you know, bigger. So in my opinion, now there's a lack of awareness of how such relationship is torn. And so I now what we need is to take care of relations. And of course, the cure needs time, and you need curiosity, you need empathy, so time. So these are the three characteristics that politics believes they can do without. And then the separation between the politics and the people increases, and the distance increases. I'd like to tell all of you and all my friends, well, I realize that associations are fundamental. They have an important contribution to make in order, for instance, in terms of reporting. But on the other side, it's true that we feel we were left alone, but we left politics alone. I landed, let's say, on institutions, and that was quite unexpected. And we need to find a solution to all that, especially when it comes to this idea based on which politics is something we don't want to do anything with. Because if we leave politics alone, of course, someone has to act as a politician. And if we don't support them, they will act without us and they will tell they are representing us. So this is something I like to stress, because someone was mentioning the Common Agricultural Policy, the CAP. So that is complicated, because on the one side, we're told, okay, no one is dealing with the CAP. But then when you, as a politician coming from associations, you say, okay, let's deal with the CAP, then we are told, okay, no, we're independent, right? But then maybe there should be a little bit more of curiosity and generosity. That would be great, great and useful in order to solve a problem that we cannot afford any longer. That is to say, the separation between society and politics. Thank you, Rossella. So now back to Monica, Monica Di Sister. And I would like to ask her to insist on this separation between policymakers and the society, the society that is committed on a daily basis and analyzes on a daily basis, proposes and suffers and works on a daily basis. So while Rossella was speaking, I saw that in a debate on television a few years ago, the old-fashioned approach when, for instance, politicians were asked, oh, do you know how much a liter of milk costs? Do you know how much a kilogram of bread costs? But policymakers were not able to answer to those questions because they were not buying anything at the supermarket. They were not involved in the daily lives of people, in the street. of the men in the street. So this is what I was thinking about when talking about, for instance, markets and street markets that were closed, whereas other groupings of people were allowed. Yeah, I agree with Marcel, and I believe that if someone has never left policymakers alone, well, this is us, Rosella knows it. I believe that there are those that have the, let's say, the wish to represent the others, and this has to be done, but we have to provide our support to policymakers in turn. And for instance, I, for instance, participated in a lot of activities and meetings with young people. And I mean, we have to feel part of something. And I agree with Rosella, but because if the policymakers don't ask, then of course they cannot reproach. So the point is, I am on the side of those, and I'm the one who is continuously, intervening. And so I believe that this is what we have to do. This is what we have to knock on the doors. And it's also right. And it's also part of the rules, the fact of defining areas of encounter. This morning, for instance, there's the first workshop organized by the OECD and by the Ministry of the Environment, which gathers ministries and civil society representatives dealing with sustainable development. So forum established within the Ministry of the Environment, so with proportional criteria in terms of representation, etc., all the criteria to be adopted. So they are analyzing now through a joint decision-making approach. They are revising the development of the sustainable development strategy of our country. So in this case, the facilitator is the OECD, and they are trying to understand how to become more sustainable when it comes to prosperity. So in terms of finance and production, so this can be done. We don't have to wait to be elected to directly represent the others. We definitely, in my opinion, have to test new approaches like structured for instance approaches, and this is the important contribution we can provide. Thank you, Monica. Final word also, Elisabetta Mercaldo. I'd like to ask her when it comes to disintermediation. Well, the unions, do you think the unions have been affected by this approach over the last few years? Elisabetta, are you there? Maybe the mic is off. Elisabetta Mercaldo, are you there? Oh, maybe she left the meeting. So at this point, let us close this second panel, and we are breaking for 15 minutes. So be back at 12:45, and we'll have Elly Schlein, Vice President of the Emilia-Romagna region and former member of the European Parliament. And she'll make a keynote speech on a number of important topics. Thank you, and see you in 15 minutes. Thank you.
Buongiorno. Elly, buongiorno, vicepresidente. Piacere.
Buongiorno.
Grazie mille.
Oh, good morning and thank you. Buongiorno Giulia, sorry for being late, but I'm here. It's a pleasure. Of course, we are really happy to have you here with us. We are amongst friends, so I hope you don't mind if I call you by your first name. So I would leave the floor over to you so that you can deliver your presentation. Thank you. Thank you, Giulia, and good morning again. Thank you. It's a great pleasure to participate in such an important conference. And I would like to say hello to all the partners of Finance Watch in Italy. I know that this morning you've heard from some very important speakers and panelists. Well, and my contribution, of course, is in between sustainability of fiscal environmental policies and finance at the service of people, and also the way in which we socialize finance. So I would like to share with you some thoughts, starting from a very important point. We are in a pandemic, COVID-19, that is challenging the very same idea of walls and boundaries for those who, wrongly so, have become very much attached to that concept. So we are in a crisis that has affected the European Union, also if different countries have been affected in different ways. But the European Union has taken steps that were unthinkable until a few months ago, as Mario Nava from the European Commission said this morning. I'm reinforcing this today because I'm a vice president of Romagna regional government, but I've gained some experience in Brussels for 5 years at European Parliament. It's not something obvious or to be taken for granted. What is changing right now is the orientation of the new resources of the next generation EU to address the most crucial challenges for the future. So digital transformation, green transition, and social cohesion. And these are topics that are very clear to those who deal with sustainable finance and impact finance. And we can draw some inspirations from them because we know, and we've known this since the 2030 Agenda for Sustainable Development of the UN has been approved, that first of all, that's a universal agenda. So it is actually calling for all the governments to participate in doing their share to reach the 17 goals. But we know that it's not going to be enough to have the engagement of the governments unless this is supported by an important leap forward. Individuals, enterprises, those who can choose and must choose to orient their investments and their projects towards a new direction, which does not take into account only the employment impact, but also the environmental, social impact of their investments and their projects. The 2030 Agenda is marking an important cultural innovation, that is to say, keeping together, intertwined in their interconnections, the fight against inequalities, the fight against poverty and hunger, access to universal services, fundamental rights, the right to health, the right to education, that have been reinforced very much over the past few months, and green transition, sustainability, and the protection of natural resources and the ecosystem. So this combination between the social, environmental questions must lead us at a government level to make our policies consistent on all levels in order to attain these goals, but also to assess the impact of the investments we are making in this direction. We know that sustainable finance must look at the future, at the medium to long term. It shouldn't look only at the short term. And this is what we are called to do this morning. And it's even more difficult today because given the dramatic social, environmental and health impact of COVID-19, there will be the temptation to say it's time to restart. It's not the right time now to change the main lines of action. Well, we can't afford that. It's precisely now the right time to rethink what we have been doing to set the stage for the improvement of the quality of life for people, for the planet, because these questions are strongly interconnected. And this is confirmed by inequalities in their interconnection with climate change. If we look at those who are paying the highest price of climate change, well, is alas, those developing countries that has contributed to global warming in a limited manner. So we are witnessing an increase in social, economic, local and gender inequalities that we have to counter. And we have to do that by guaranteeing innovation in the instruments we have at hand. And the key to ease social tension is answer everyone, so to provide responses that are suitable to meet our individual needs. This is the gist of our policies, and to consider differences and to make the most of such differences. We shouldn't forget about them, but we should guarantee equal access rights to common and fundamental services and goods. With respect to Next Generation EU, our country should make tremendous efforts to plan something new. We have some stringent deadlines for the use of such resources. So I'm calling for the government to involve the whole country, to involve the regional authorities, to involve the social partners, to involve the tertiary sector, environmental organizations. So it is key to have a stakeholder governance approach. We are trying to do that in Emilia-Romagna. That's good news we received yesterday, because we have signed with 55 institutional counterparts, so schools, universities, employers associations, professional associations, the tertiary sector, unions, and also Legambiente and the network of zero waste municipalities. We have managed to bring them on board and join this climate agreement to guarantee quality of recovery through green transition, through the green transition. We know that the green economy has several labor-intensive sectors. Well, clearly transition is not something that happens over time, overnight. It's something that must not be put off, though. So it calls for a strong political will to accompany this path by channeling all the resources coming from Next Generation EU and from the structural funds in the new programming period 21-27, considering also the reduction of CO2 and greenhouse gas emissions, considering also other regional funds that have to be reoriented in this direction for energy efficiency. The eco bonus is very helpful in this regard, because it implies savings for people, for households, and of course has a positive impact on the health of people and on the environment. We should try to make an innovation effort. Saying digital transformation is not enough. So I was born in the 1980s, so I'm a nerd, really. Well, technology has definitely helped with our lives and with our production processes, but we have to make sure that the added value they guarantee is equally redistributed in society. Otherwise, such technology might risk calling further polarization. Think about riders or the workers of DG economy. We must not allow for such digital transformation to cause forms of exploitation of the workforce. So these resources have to be used to digitize the public administration, to have an easier relationship with the citizens, also guaranteeing the transparency of the PA, and also helping small and medium-sized enterprises to open up to bigger markets. But of course, this is going to help if we manage to have a systemic vision by orienting the PA to specific missions and to orient the PA to achieve concrete results. This is what impact finance is teaching us. It is important to obtain results with very clear targets. And this is what the Next Generation EU is asking of us. Nava, I'm sure, has said it, or our interlocutors from the Commission. The famous 209 billion is not delivered automatically, but is based on performance measurement. So we have to monitor the attainment of such objectives. So the involvement of social partners is essential in this regard. To conclude, I know we don't have much time. I would like to stress that in our Pact for Labour and Environment, in addition to some strategic goals, we have also included a team of research on sustainable finance. We want to understand how a regional government can support and accompany projects in this direction. We must not forget that this conference today takes place at a key time where we are rediscovering the role of the public. So healthcare, proximity healthcare services, social services. But public and private have different roles, but through these tools, they can bring their objectives closer. And it's a two-way path that should see us involved in our different roles to be better oriented in this direction, because ethical and sustainable finance is bringing the private sector closer to the public one, which is the only one who has the obligation to guide policies and to orient them towards collective well-being. And let's not forget about what we have been doing on best indicators, so well-being indicators. One of our victories, one of our achievements was to ask to consider the objectives of the 2030 agenda, to find the intersection point to define economic policies, taking into account these new goals. This match is played at a global level, but also at a local level. The famous local level. So we should keep these values together. The social capital of the territories involved is extremely important. We should adopt selection criteria for investments to support realities that can give a positive contribution in terms of environmental and social and economic sustainability. We should integrate selection criteria. And in part, we've seen that because when we have calls for proposals, we have to consider these criteria as well when it comes to the allocation of resources. I'm thinking of the green procurement, for example. There's a company that is making some important steps. It should keep doing so to enrich the regional system and also support realities that can offer some good practices. I'm thinking of the question of circular economy. Well, circular economy is another win-win strategy that helps enterprises save money because raw and secondary materials are put back into the production system. And this is something that we can rely on as institutions at all government levels. One last remark to conclude. I think this challenge is humongous, and I think it should lead us to listen to each other, to fine-tune all our measures. We have to take this opportunity. We can't do otherwise because science told us that we don't have much time to reverse this trend, especially with respect to the climate emergency, which we must not forget about while we are dealing with a health, economic and social challenge. Well, I know the Finance Watch has been very much involved in transparency issues. There are some questions on which to guarantee a better integration of policies, for example, fiscal transparency. I want to conclude by mentioning this. When we talk about fight against inequalities and give answers that are fit for their needs, we must not forget that there is some ruthless fiscal competition between the very same member states of the EU. And there are some companies that have an actual tax rate of point something. This is not sustainable for the future unless we make sure that fiscal and financial transparency instruments are standardized. I've seen no banks to shut down because since 2013 there has been a reporting obligation about how many branches, how many profits they record in every country where they operate. This transparency must be key to understand who's taking resources from whom. Otherwise, everybody will lose here, countries and citizens that won't have enough resources for investments and for personal services. That's not a battle we have to fight together everywhere, especially at a European level. Thank you for listening, and I wish you all the best for today. Thank you, Elly. I would have dozens of questions to ask you. I don't know if you have time to stay with us for a few minutes. Meanwhile, I would like to ask Marcella Corsi and the other panelists to prepare the next panel. And maybe Marcella Corsi has a question for Elly. First of all, I would like to thank Elly for being with us. And as already did with the other keynote speaker, Mr. Nava, I would like you to consider the gender interpretation of the challenges that are ahead of us. This is not only a question of policy making. I know you're particularly sensitive to this issue, so I would like to take the opportunity to hear from you about this as well, because when we talk about giving visibility to the needs of people, and when we talk about what we should do to make finance more social, to socialize finance, we must not forget that people have given gender, age, geographical background, and so this is fundamental to consider, especially in the light of the programs that have to be launched within the framework of the National Recovery and Resilience Plan, which for the first time, even if this document is lacking on many sides, includes gender perspective as something very clear in terms of impact assessment. I don't know if you have something to say in this regard, maybe just 1 minute. It's a great pleasure, Marcella, and thank you because you give me the opportunity to add a few things. Well, first of all, we have a dramatic framework of gender inequalities affecting every sector of society. We need a gender mainstreaming approach. We need a gender dimension to be adopted in all public policies. That's essential. With the Next Generation EU, and I've joined a campaign called the Just Means, asking to pay attention to make sure that those resources were actually used to bridge the gender gaps rather than making it grow bigger. The sectors for which we expect investments of the Next Generation EU, for example, the energy transition, the energy transformation of buildings. Well, female employment in this sector is very limited. Women are underrepresented. Another example that is even worse, the digital sector, ICT-linked professions. It's another sector where women are underrepresented still. So when you hear about 37% investments, not current spending, for sustainable mobility, infrastructure, energy saving or energy requalification of buildings, Well, we risk, unless we adopt a gender perspective, to make those gaps grow bigger. That's why I insisted very much when exchanging views with the government about this approach. There's another ugly truth to share. When we thought about the 3 priorities of the gender review that recall the agenda: green transition, social transition, and social cohesion, which is not very much mentioned because it is a sector where it is harder to think how, with the spending criteria of the next generation in the EU, we can make investments rather than current spending. The same happens for support to education and employment for women. For example, we're the sector where I've been asking to invest in social infrastructure, so daycare activities. This is something very important to fight against school dropout and illiteracy, but it's also a formidable instrument for the work-life balance. Without services, let's forget about making women grow, because during the first crisis, 2008-2009, social policies suffered a number of constraints and were transformed into a social welfare themselves. So we have to work on daycare activities and on facilities for not self-sufficient people. I'm referring to nursing homes for people with disabilities. So we have to work on Middle Earth. Investment in home services and home assistance services, and we have learned, and dramatically so, that during the pandemic that's very important. But also living together, proximity measures, as we call them, solutions that somehow place more value on the autonomy of people. So what I meant is that on the one hand, we need projects aimed at bridging gender gaps, at countering gender violence, starting from schools as well, even if I believe resources cannot be used in that sector. Starting from schools, starting from PAs, that's another sector on which we have to work. But everything we can do in terms of investments within the framework of the Next Generation EU, well, this is something we must not forget about. Well, we need a gender dimension also in all the other investment chapters of the Recovery and Resilience Plan. This is the correct approach to make sure that these projects are really bringing about a transformation. This is a question of missed economic opportunities, because the Bank of Italy says very clearly that if female unemployment was 60%, we would free up 7 additional GDP points. So who might say no? This is a feminist battle, but it's for the benefit of the whole community, and we must always stress that. Thank you, Elly. Thank you very much. Thank you very much. I have nothing to say and nothing to add. I would like to thank you, and I hope you will keep following the work of Finance Watch and a network of members and friends in Italy, which we are launching with today's conference. So thank you very much. I'll see you again soon. You can rely on that. Thank you.
Eccoci, allora vado, comincio così.
So, I'll just put up the slides to show the participants.
Intanto li saluto, anzi le saluto e li saluto perché è un panel perfettamente bilanciato.
That's a perfectly balanced panel, 2 men, 2 women. I'm pretty proud of that.
Non seguiremo esattamente l'ordine che stai mostrando.
I'm not going to follow the order of speech you see here, and I will explain briefly why. Well, this panel is, the right shift from diagnosis to treatment. As Finance Watch, we decided to start this path, and we wanted to be a new instrument to diagnose the Italian reality through interrelations with many realities. I've been cooperating together, we've been cooperating with Finance Watch in particular for some time, but we still haven't found a specific dimension here in Italy. So we have to make a diagnosis first, but then we have to start treatment. So we have to define what are the needs of our patient or of our sick person, sick man or sick woman. We are not all the same. So I've decided to organize this panel first of all, to contribute to a vision of what we need to do, and also to give very clear indications on how to operate, because obviously these two concepts are not the same. So we'll hand the floor over to Lucrezia Fanti, who's a researcher at l'Istituto Nazionale per l'Analisi delle Politiche Pubbliche, INAPP. She has collaborated to many projects, the Easy Growth, etc. And she has worked for some time on a diagnosis of COVID-19. To focus on the needs of the patient. So Lucrezia, you wrote a beautiful article on this with other colleagues who are not here with us and that you are going to mention. The main risk is to get out of this crisis with the idea of a new normality, which is just a slight change to the past, whereas we need a new reality, a new innovation in a way to interact with the surrounding world and with finance in particular. And we will conclude this panel on this. And immediately after you, we'll hear from Luca Fantacci. Lucrezia, please, the floor is yours. 10 minutes, please.
Grazie innanzitutto a Marcella.
Thank you, Marcella. Thank you so much. I wish to thank you organizers for inviting me. As said, I'll tell you about the main items of this approach, as well as the economic and social consequences of the pandemic in Italy. And the title of my contribution is Unequal Society in Usual Times. And well, the title is how clear about what Marcella said. The starting point of our analysis is a sort of critical analysis of a number of macro trends which have characterized the capitalist and advanced capitalist systems and of the Italian economy of the last decades, and which on the one side to identify a number of inequalities, like economic inequalities, and on the other side, we've seen, let's say, the deployment of some economic approaches that somehow led our economies, like for instance, the austerity measures, which led to a progressive cut and reduction of power, let's say, of some reduction of, let's say, levels, spending items like public spending and the spending allocated for education, which had some let's say, which suffered from the consequences and the detrimental consequences of the pandemic. So the COVID affected a situation that was already difficult. And this is a, let's say, paradigm of the liberalism of the last few years. So the pandemic may represent an occasion, as Marcella said, to question the present approach of accumulation, and which is characterized, as we know, by uncontrolled finance and radical transformation of digitalization phenomena and fragmentation of the value chains. And all the things that we mentioned also in the previous sessions. In any case, all of the responses, let's say, involve the generalized lockdown and social distancing. I don't want to linger on these details because this is not the main topic of my contribution. But what we wanted to do was, well, considering or analyzing the effects of these, let's say, political responses at a level of pre-existing inequalities. So we analyzed how COVID had and will have effects that affect in an asymmetrical way the different social classes and the different productive systems and areas of our country due to a pre-existing situation. So the shock of the pandemic is asymmetric, and then the consequences somehow were impacted by the existing situation. So differences in terms of gender, in terms of housing, in terms of access to basic services like healthcare or education, or for instance, smart working or smart learning or digital divide. So we are analyzing, let's say, the proposals made and also the situations that existed even before the pandemic and which have been impacted accordingly. So we can make a distinction between direct and indirect economic effects of the COVID-related crisis. And as regards to the direct effects, well, they are mainly referred, unfortunately, to the death rate. So when deriving from the COVID contagion, mainly affecting the elderly, and in our opinion, of course, casualties cannot be just part of merely counting, but the effects also affect and the population involving low-income individuals. And in fact, it's enough to have a look at the income inequalities and other economic fragility indicators, like, for instance, people at risk of social exclusion or risk of poverty in the different geographical areas of the country, even before the pandemic. And then we understand how the pandemic struck and affected low-income people, involving, in particular, women, in the south of Italy and in the suburbs of the cities and city centers. And also, we've analyzed how the shock may extend this impact. Inequalities in terms of wealth and health are not the main ones, relating to the potential, let's say, widening of inequalities, because two other important aspects relate to the housing and working conditions. And in fact, we know that workers were struck in a heterogeneous way, according to the degree of exposure to different risks, like, for instance, health risks, or, for instance, risk of contagion that was higher in case of low-income employment, or the risk of losing one's jobs, especially when it comes to those workers having fixed-term contracts, for instance, and also the possibility to work remotely. And a recent study, for instance, stated that this possibility involved 30% of the workforce in Italy only, and in particular, managers and members of the academia. And in any case, the workers that have open-ended contracts and very good contract labor conditions. So this is a particularly important aspect, because then there is an inequality in terms of opportunities and situations involving the genders. We were quite provocative in our paper because we summed up the typical victim of the lockdown. This is a woman with children living in the suburbs of a city, in the central or southern areas of Italy, and in a small flat, eventually lower than 60 square meters. And so these were the typical conditions that we've analyzed. Another important condition, as I said before, is the heterogeneity in terms of sectors, that is to say, the sectors involved when it comes to the manufacturing area. So also services were affected. And for instance, all of those sectors affected by social distancing, like, for instance, entertainment and performing arts, but also profits were obtained by web companies and by all of those platform-related operators that became fundamental also, and mainly thanks to social distancing. And the lockdown, but not just lockdown per se, but a pandemic and also the responses to the pandemic had different effects on the Italian companies, and also in consideration of the different degrees of exposure to indebtedness. So different degrees of exposure preceding the pandemic, which also entailed the higher fragility for those companies that had to deal with the shock on the demand side and on the supply side as well. And this was due not just to the lockdown as from March to May, but also in consideration of a number of enduring differences that are accompanying the second wave of the pandemic. So by way of conclusion, what we propose is an approach, let's say, dismantling these common narratives based on which we're all the same before the pandemic, because we are in completely different situations, unfortunately, and we are all different. We're all treated differently, and this crisis is exacerbating the social and economic inequalities, and also the situation that was there already before the pandemic. So we have to think about possible pathways for the future, hence allowing the new normality to be shaped in a different way. Thank you, Lucrezia, first of all, for sticking to the schedule, but also for the interesting contribution that you've shared with us. That is to say, an accurate diagnosis of the needs of the subjects that we intend to identify, also by means of the financial tools available. So now the floor to Luca Fantacci, co-director of Research Unit of Monetary Innovation, New Technologies and Society, MINTS, Buffy, Kevin Center, Bocconi University. I'd like to refer to one of the papers that was titled this way. And in fact, this is the title for this let's say, panel, named after a paper that Luca wrote a few years ago, when he said the objective of the finance has to deal with uncertainty rather than removing uncertainties. We cannot ask finance to do what it cannot do, and the only way actually for human beings to face uncertainties is to have relations, and this is the reason why we're here today. So in order to also make promises and to get some trust from others while making promises, we have first and foremost to accept to depend mutually from one another. And so, Luca, what is the recipe that you suggest to all of us when it comes to a real socialization of finance? Thank you. Thank you, Marcella, and thanks to the organizers. I'm really glad to have the opportunity to participate in this event, which is definitely important nowadays. I would like to talk about the diagnosis before talking about the cure, if you allow me so. And easy to do because, as Marcella said, finance as intrinsically to do with uncertainty, because it is the part of the economy that somehow exposes us to the future. It is the space for promises, and the future is by nature uncertain. Of course, now we perceive it in a dramatic way, but it's in the nature of the future, that of being unforeseeable. And the future holds surprises. And that's how it is. We cannot change it. And in order to face this uncertainty, this radical uncertainty, finance, even before considering the problem of the socializing aspect of finance, well, it has structurally encompassed, for instance, the two figures, that is, say, the debtor and the creditor. As Marcella said, they are not in the same situation, of course, but they are somehow linked and bound by sort of solidarity, because they are both exposed to the uncertainty of the future, and both have to suffer from the consequences of the situation. But when it comes to finance, over the last decades, what finance wanted to transform this relation into a sort of security, into a good that could be somehow traded, and then uncertainty could be somehow managed and handled. This must be stressed, and this was already mentioned by Mr. Masala, this relationship between, for instance, banks and customers. But we also witnessed over the last decades a form of finance that has, let's say, eliminated this relationship. So the neoliberalist approaches stepped in, and finance now is antisocial, just to mention Keynes, who said that among the ideas of financial orthodoxy, nothing is less fair than what we are witnessing now, especially when we have a market in which we are buying and selling securities. Because these are sure savers, of course, because people say, okay, I invest today and I can divest tomorrow. So in compliance with this principle, we had a series of innovations, like, for instance, over the morning that we had the securitization, which is the clearest way, because in that way you transform a relationship into a piece of paper, and this is the denial of the relationship. And of course, you have to deal with NPLs, you have to deal with problems, but more generally, the transformation, for instance, of goods into securities, and also the transformation, if we look at the legal form of the savings bank into cooperative banks, into joint stock companies that have to comply with the rules of a market-related finance, and also the confusion between commercial banks and investment banks, which took place at the end of the 90s. Generally speaking, as Andrea Barale said, the reduction of the banking biodiversity, and also internationally, the passage from direct investments to portfolio investments. So all of these trends have taken us away from finance intended as relation, and they led us to act within a market for apparently noble and high-level reasons, because we said, okay, the market is a place of efficiency, transparency, and merit, and also the place of growth. And look at where we are now. We are in a situation in which this system of finance and market had terrible effects on the social fabric, and this was also mentioned by Benoît Lallemand at the beginning of the workshop. And also, this had an impact on stability. So the market finance produces, of course, crisis, and as a side effect. But this is the paradoxical effect we are dealing with now. There is a market finance which is not able to provide efficiency, certainty, and growth, which were the primary goals it had at the beginning. And in fact, Andrea Baranes talked about that, talked about liquidity. So now, by continuing to think about liquidity, we are not able to produce growth, and we are not able to produce transparency neither. And this was mentioned already by some of the previous speakers. So at this point, let's see what the cure can be. So the treatment or the cure that characterize the first responses to the crisis, and this is important to note. So we invited central banks to step in. We desperately tried to treat the liquidity crisis through massive liquidity injections by central banks. And they were at the same time fundamental but counterproducing. Because, well, first of all, they are laying the basis for future crises. And this was mentioned yesterday by Mario Draghi as co-chair of the G30. And he said it's not sufficient. And it's just a veil, sort of injecting liquidity on problems which are structural ones. That is to say, the over-indebtedness, which hides, for instance, insolvency. So how can we find a real and radical cure? And now we have to grasp this opportunity. And this is something which we've been saying for months. We have to change direction now. We have to change approach. And we have to send merchants away from the temple of finance. And that was said by Jesus Christ already. So we have to start and see finance as a fundamental relationship of within the economic life. For instance, and with a series of ancient tools like cooperative credit, and also various forms promoting financial inclusion and microcredit, or long-term investments. They say, look at the future and not tomorrow. And so this would be important. And we have to do that, especially in a moment like this one, which the interest rates, at least the official ones, are on the negative side. So of course, this is the right time. And so we can maybe somehow put the present aside and think about the future. And then we have to develop new tools. We talked about, for instance, impact-related finance, the social impact bond, which is a particular, let's say, instrument, which is the instrument par excellence to say that investing doesn't mean that you have to invest to produce and to get profits, but also to produce results, concrete and tangible results, especially where the public action is not able to go for financial reasons. So I wouldn't like that then the euphoria of the funds we have now prevents us from understanding that, of course, we have to lay the basis for the future. And of course, based on the neoliberalist doctrines, the states have to learn how to, let's say, find and identify new forms of financing. And so, for instance, linked somehow to the environment. And then also a number of activities through which companies join themselves. And also, rescue should not be through loans, but through equity. So sharing of profits and debts, which is a new way for, having relations at the basis of a renewed finance. I think I spoke too much, and I like to close here my contribution. Thank you. Thank you so much, Luca. Also for this closing, which is somehow focusing on trust. And I'm sure this may make our links stronger, especially when it comes to the relations in the financial framework. So without any further ado, I'd like to give the floor to Nicoletta Dentico, who's going to talk about these topics. And she has a huge experience and presently and currently she is the head of the Global Health Program from the Society for International Development. So the right word of the United Nations, which have been referred to on several occasions, also with the 2030 agenda. But also I like to involve Nicoletta as, for instance, one of the founders of Banca Etica. And Nicoletta will mention a keyword in the diagnosis of the crisis we're going through, but also as a solution for the crisis, that is to say, the cure. But we're talking about health now, and I'd like to quote something, a book, a paper that was published a few years ago, that is to say, the title was Curing the Cure. So I'd like to ask Nicoletta to reason and to elaborate on the curing the cure, and also to identify, as she's well able to do, all of the topics that were somehow mentioned in terms of type of, let's say, all of the activities we have to develop, especially when it comes to the role of health and the major role played by large corporations and their role in this scenario. So please, you have the floor. Thank you. And I wish to thank Finance Watch for inviting me to participate in this extraordinary debate. I've been taking notes since the beginning of the meeting. And this is also an important symbol. After 1 year that we've lived in a sense of, let's say, danger and risk, but at the end of 2020, which is, well, 75 years after the setting up of the UN. Well, I love these coincidences, and I found them, well, definitely important. And this meeting is absolutely relevant, especially because we're involving different types of speakers. So since I didn't know that the idea of socializing finance had been named after the paper by Luca Fantacci, I'd like to say that I thought a lot about how to describe the idea of socializing, because finance, money, since it is per se, the way I conceive it, a tool for relations, I cannot but see it in a social way and in a socializing way. I would like to refer to some of the things mentioned this morning, especially by Emilia-Romagna, who reminded us about the central role of individuals. So behind all of our conversations, we are talking about human beings with names and surnames, people, individuals that may make choices according to how they are, given chances. So what comes to my mind is a lack of socialization within finance. That is the one that we are going through. I start from the current affairs, and I like to mention this fact immediately. So, and there, well, it encompasses the idea of curing the cure, and I'm talking about vaccines. So the huge quantity of public funds allocated, rightfully so, for research and development and to identify the right vaccine, and which had to help us to somehow control the contagion and to somehow eliminate COVID-19. But now, and we know it, this shows how the public function, or better, the ability of the countries and the states there with a particular private sector, that is to say, the one of course, there's the pharmaceutical sector that, in my opinion, has a number of dynamics which are completely different from the other sectors. And then they are in different situations. But what I mentioned is the $1 billion that the US and the European Commission paid to pharmaceutical companies with the motivation of speeding up, end up with a privatization of finance, because what is happening now is that since we have not negotiated any condition with the pharmaceutical companies when it comes to the use of the products stemming from these public funds, well, and of course from the attempt to socialize finance for a common good, well, we find ourselves in a situation in which we have to manage products like vaccines with a substantial, let's say, limited level of transparency, because for the first time in history, we have announcements on the efficacy of a vaccine through press releases instead of having, for instance, them included in peer-reviewed medical journals. So we're going to have products which are covered by property rights, and that's monopolies, which are exactly against cost efficiency, and also the less social solution we may identify. So I start from these words because, and I say this at a larger and higher level, because this international approach is doing nothing else but reiterating what was said before. There's, say, the Italian or European dimension, or as Andrea said, the usury and the problem of people, because then the use of public funds leads to negative effects. And then a loop starts in terms of impossibility of being able to face problems and to find solutions. So we are getting far and far from the best way to approach finance, and from the way in which we might transform the use of finance for the promise that we mentioned before, the promise for the future that Luca mentioned. Because now with COVID-19, the main issue is what's the future holding, and how can we get out of this pandemic? Of course, this is the main question, but then how are we going to develop the conditions preventing all of this from happening again in the future? Because otherwise, as experts say, COVID-19 is just the beginning, and it is the opening of an era of pandemic. And we had several announcements and about that, and possible scenarios mentioning that. So now we are in the middle of the challenge, to say socializing finance and socializing reforms, or accepting, maybe because we are not able to manage, or maybe because maybe due to a matter of inertia, well, accept that these financial resources are allocated to the trade of, for instance, those products, because pharmaceutical companies speculated, of course, strongly speculated and aggressively speculated on the situation. It is enough to say that biotech CureVac, which came in the financial market mid-August, had an increase in its shares by 400% in 48 hours. So if here we are dealing with health based on these dynamics, well, that's a problem. In the meantime, we also have the pandemic profiteers, that is to say, all those that have taken advantage of the situation. And as we said before, they, for instance, transformed these situations of crisis into huge speculations and opportunities. Well, this set adrift that has become truly sound after 40 years of deregulation of the financial industry. So the Institute for Policy Studies from the US released the latest data last November, and based on which the wealth of US billionaires, of a group of billionaires in the US, raised up to reaching 1 million billion from March to November, with a 34% in a few months' time. So the problem here is that through this, let's say, diagnosis, I'd like to move on to something else, that is to say, one of the core issues of the cure, that is to say, how can we cure the cure? And how can we also cure a word that needs to be able to name the issues as they are and find the right solutions accordingly. So COVID-19, if we want it to be a watershed, and if we want to grasp the opportunity for this virus, which is cruel, but which is more rational, and also can also represent a lesson learned for us, well, then we have to face and deal with the issue of uncontrolled flow of private capitals. So we have to deal with the fact that we have completely destroyed Bretton Woods, and today we allowed the only existing rules are those based on which these huge capitals may somehow be outside of space and outside of time, and capitals may go around based on the opportunities in place. And also, according to the wealth and the positive trends in the different countries, and also based on the negative trends in particular, so the fact of maximizing profits, not just according to the debts in the countries that are in the south of the world, but also, for instance, with the meteorological futures, or with COVID-19, and with let's say, creation of a number of financial products which are linked to the terrible impact of the pandemic and health problems and starvation that we see in many countries in the south of the world. Nicoletta, forgive me. Unfortunately, we have to, this is what I see, and I like to come to my conclusions. So now, without the cure, we're going to have a general weakening of politics. So we need to, let's say, take advantage of the funds available to us. But until that moment comes, well, you know that money can do everything, but the only thing I ask you when it comes to the cure is we need to face and to cure a disease that has been with us for a long time, that is to say, the debt of the countries in the south of the world. This is an issue that had a terrible impact. Well, they could not manage COVID-19 also from the point of view of social investments. And it's alarming that multilateral organizations, well, despite of the clear lessons coming from COVID-19 and based on what the World Bank said last January, the World Bank said we have an unsolved problem of public debt. Well, they are now keeping injecting funding and financing and loans and other transactions that continue to have the prevalence of the private sector, despite of the fact that COVID shows that the governance and the market rationale within the social framework, well, it fails. Because when you really have a problem in terms of healthcare, if you have a social problem, then the market logic of the private market doesn't work. So I believe that these two topics, that is to say, debt on the one side and the control of private capitals, well, these are the two aspects that we have to, let's say, act upon, and we have to ask for clear policies to the governments, a new vision for the future, and this is what Luca and Lucrezia mentioned, that is to say, finance serving the society. Thank you. So now I would like to immediately give the floor to Nino Baseotto.
Di Finance Watch, ma soprattutto direi della sua lunga
Historical
esperienza.
member of Finance Watch, his long experience in the field of industrial relations, he can help us redefine a little the rules of the game, looking in particular at corporate social responsibility for the sectors he represents as a union, so financial sectors, the national sector, first of all, but also with this general vision of how to socialize finance that, of course, leads to international financial relations, where the stakeholders mentioned by Nicoletta cannot be ignored. So Nino, the floor is yours. And we can conclude this diagnosis with you and think of a possible treatment. Thank you. Thank you for the opportunity to listen to this very interesting day. I will start from an obvious statement. The pandemic has radically changed contexts and priorities at the global level, especially when it comes to the perception of realities on the part of people, especially those belonging to the weakest categories. In Italy, COVID-19 has shown the meaningless of the policies that have been pursued over the past 2 decades that have led to important cutbacks on strategic sectors like healthcare or schools. Choices that have been objected and contested by the Italian movement. We realize about the need to reverse this trend with a view to have a credible new beginning once the pandemic is finally over. In this sense, I believe that the next generation EU, in terms of quality and in terms of quantity, is an unprecedented instrument in the history of Europe as a community. It is well known how the political debate is pretty lively when it comes to policy priorities. So the role that financial sectors are called to play is key in this regard. We need a financial system that is strongly oriented at responsibility, corporate social responsibility and sustainability. These are 2 things that should become more concrete into specific areas, and I will try to be very short in this. First, between February and October this year, there has been a considerable increase, plus 8.2% of savings, i.e. 130 billion euro on private and business current accounts, especially small-sized enterprises and micro enterprises. Well, I think it is necessary to favor, of course, with all the necessary guarantees, a use of this critical mass of private investments aimed at investments with a strong social impact, environmental impact as well, with a special focus on the south of Italy. Investments that are characterized, and I would like to stress that, by the fact that the state must be in a position of focusing on the sectors that are worthy of research. Digital innovation is essential, and we know very well that it is going to mark the labor organization and society in general, changing radically the conception and the fruition of space and time. These digitalization processes are considerably changes also the financial system at a global level. So in our country, the amount of the scope of illegal activities is causing damage, and it is a burden for the Italian economy. How to incentivize the use of electronic payments is one of the notes of every policy that truly aims at countering these phenomena. So money laundering, loan sharks, and other illegal activities. So we should incentivize the traceability of payments, and this is an absolute need. The financial system should be the main ally of this contrast activities. In fact, the cost of management of cash in 2016 has zeroed the profit that was almost 2 billion euro that the 12 bigger banks in Italy had obtained. So it's for this reason that it's reasonable to believe that banks can accept a reduction of the ordinary proceeds in the light of an increased volume and a sharp drop in the circulation of cash. This, of course, must fit into a reform context, incentivizing the use of digital means of payment or modes of payment. Of course, efficient cashback solutions must be adopted based on the principle of progressivity, something slightly different from what our government is proposing right now. In addition to the creation of conditions to bring down transaction costs and fixed costs for POS. Third area of intervention, the increase of inequalities is the most devastating trait socially over the past 20 years. The pandemic has further contributed to exacerbate the situation. The goal to reduce inequalities is for us a strategic goal. And as such, it should become strategic for the European Union at large and for the Italian community. In this context, I believe that the financial sector can fulfill some important tasks. For example, defining new rules to access credit for the cost of credit, enshrining the right to financial consulting and also insurance consulting that is accessible to everyone. Women, young people, the south of Italy, these are the three dimensions around which the biggest inequalities are concentrating. With respect to male employment is 68% versus 50% of women, most of whom have also lower salaries. At the end of last year, the so-called needs, the 15 to 29-year-olds who are not in education, training, or employment, were above 2 million. With the pandemic, the employment rate of people under 34 has dropped below 40%. So for young women, access to credit and to many banking and insurance services is difficult, if not almost impossible. The historical gap between Central North and South of Italy is not epitomized only by lower employment, lower GDP, lower income, but is further exacerbated by the fact that in the South, the cost of credit and insurance cover for businesses are higher with respect to the rest of the country. This was mentioned in another panel this morning, and this, of course, gives leeway to organized crime and to mafia and to criminal organizations because they have the possibility of meeting liquidity needs of those who are undergoing difficulties. And there's also the other side of the coin to consider. While we're curious to hear about who's taken over who, accessibility to many banking services has been undermined, especially in the south, but also in the mountain areas or in the countryside. So facilitated credit for women and young people, greater attention to local development, creation of specialized banking and insurance poles in the south. These are some of the sectors in which to which the banking system can contribute to reduce inequality and to guarantee the growth of our country. We know rifts in terms of geography, in terms of gender, in terms of age. Of course, and I'm about to conclude, attaining these goals, or at least the beginning of a virtuous circle, implies a change in context.
Europeo e nazionale. Mi paiono tre le condizioni.
There are three conditions that are necessary or essential, I dare say. First, we must develop a European finance that is at the service of employment and environment through a set of reforms aimed at changing deeply the stress test system, a better protection of small-sized enterprises, especially those undergoing difficulties, and small savers, giving the right value to the role of small banks at a local level and guaranteeing the right separation between commercial activities and investment ones in order to have a more specific joint declaration on commercial policies. Second condition. We need institutional investors and policymakers to change their pace, in terms of choices, because no one can conceive this sector as living without fiscal policies that will be key in determining a long-lasting and credible exit from the nightmare of the pandemic and its devastating consequences. I want to say that very clearly. The unions must be very resolute, more than they are now, in reiterating that equal dignity should be given to a standing exchange on the strategic guidelines for the banking and insurance sector. The third and last condition, and I'm done, we are undertaking to give more value to social dialogue and to bargaining. The system of industrial relations in the financial sector has reinforced over time with some positive connotations, and I think I can express something most unions believe, i.e., there are the conditions to confirm this good practice and to lay a bet on the method of confrontation exchange, thereby translating into agreements and contracts. This work that is tiresome, no doubt, but it's very much expected by the men and the women we want to represent. And I believe that initiatives like this morning's go in this direction and give a very important contribution. So thank you very much to everyone.
Marcella, sei muta, ricomincia.
Sì, scusatemi, avevo tolto l'audio mentre parlava.
Sorry, I muted myself while Nino was delivering his presentation. Well, it's later than 2, but we started a bit late. We heard from Elly's Schlein, so in agreement with Julia, I think we can take 5 more minutes to also give voice to some comments that were made in the chat box. I would like to thank Massimo Cingolani, who works at the European Investment Bank, to stress how the European Investment Bank can be an important actor in this scenario. And Massimo's comment regards the commitment of the European Investment Bank to support the green agenda of the European Commission by also covering the costs of 2 academic posts in environmental investments, and none of them in Italy, unfortunately, but I would like to thank Massimo for his comment. He provided a link as well. Then the friend and colleague Giulia Zacchia is asking a question I would like to submit to everyone, not only the panelists, but everyone at Finance Watch who coordinated the other panels and the other panelists who stayed with us, because Giulia's question is a question regarding everyone. She says, as a solution with respect to the to-dos, if we want to water down the current trend to reduce banking diversity, and the recourse to market rather than relations, as we have stressed when we opened this panel, wouldn't it be important to call for a postponement or an abolition of the new Basel IV measures for cooperative credits? And then she says something very important. I'm an expert in microcredit, but also I'm a practitioner because I'm a member of a foundation that has worked in microcredit for more than 20 years here in Italy. Well, Giulia says, with respect to microcredit, I can't think of how the Italian response of the increase of loans to 40,000 euro can have a bigger impact of microcredit on the social sphere, especially given the pandemic. This question is for everyone, but I would like to ask Luca first, because, well, he mentioned the microcredit question first. So Luca is going to answer first, and I would like all the other panelists and the other Finance Watch members to come back online and participate in the closing session that is going to conclude our day. So Finance Watch manifesto. So what should we do about this Basel IV, Luca? First of all, I agree with what Giulia said, and Nicoletta is nodding as well. Often, regulation goes against the trend in terms of the questions we addressed this morning. They do not recognize the peculiarity of cooperative credit. That is based on relations, so it's based on the impossibility of limiting these relations to stringent rules. Francesco Masala was mentioning just this morning.
A maggior ragione nelle realtà che sulla relazione costruiscono la loro specificità. Quindi io credo che sono due ottimi esempi, ma vanno iscritti.
These are two excellent examples, but they have to be part of a more radical need of changing approach. So stop believing that the market is a guarantee per se of greater transparency, accountability, etc. Of course, there are a number of problems to address when relations are put at the center of the whole system. We know that relations can be biased by interests or that should not have an impact on credit-related decisions. But we have to establish some principles in this regard, rather than replacing relations with liquidity parameters or with forms of commercialization. Thank you, Luca. Well, it was Giulia Zacchia wrote this question, not Giulia Porino, because she said she was above the parties. There are too many Giulias. Nicoletta, I think you have something to add. Thank you for the link you sent. I fully agree with those who took the floor before me. I must say that unfortunately regulations are the fruit, the bitter fruit of asymmetries in the lobbying power, in the interaction with institutions, and is one of the reasons for which Finance Watch was established in the first place. So to bridge this gap, or to make up for a weakness or a lack of those who were bringing forward a finance agenda in the horizon that Luca has described this morning. So people are placed at the center. So alas, today, decision makers are so dependent on 4 years of limitless globalization that, of course, have given uncontrolled power, and policies themselves are the result of this pathological condition that, as Luca said, leads to these results. The COVID-19 is the small invisible being, that microorganism that is actually causing much more and is telling us what is not working. So I agree with what he said. So I will stop here. Lucrezia and Nino, I don't know if you want to add anything else. Otherwise, we'll hand the floor over to Giulia Porino, who's going to launch the last part of this conference. I would like to thank Massimo Cingolani for the information he gave us regarding the academic post of the European Institute in Fiesole. Well, it's in Italy, but it's not part of the Italian university system, but it's part of the EU system. That's why I do not consider it to be Italian. So Giulia Porino, the floor is yours. So thank you. I would like to ask Finance Watch members to stay with us. And also to show your faces, so we can start with a closing session. What's the idea? The idea is to give Finance Watch members the possibility of explaining why they have shown interest in becoming Finance Watch members, and that become members with an enthusiasm and a contribution without which nothing would have been possible today. And give us their idea of why it is important to work, to have finance, a form of finance that is at the service of society. Before this, before handing the floor over to them, Andrea Baranes, representing Fondazione Finanza Etica, Claudio Cornelli, representing CGIL FISAC, Antonio Longo as representative of Movimento Difesa del Cittadino, who moderated the second panel, Luciano Malvolti from CISL, Marcella Corsi as the coordinator of Marcella Lab, and Isabetta Marcaldo, who participated in the second panel for Fabi. While they're checking their connections and their cameras, I would like to show you what we have created, what we are about to launch. This is a screenshot of the homepage of the first blog in Italian, sponsored by Finance Watch. It will be right there that Finance Watch members and friends will share, of course coordinated by Finance Watch Brussels, ideas, proposals, and concrete actions to change the face of finance and to put it at the service of the planet from an Italian perspective. I will show you the page, which is not online yet. I would like to ask Alessandro Molinari, who's helping me here, to join us and to log on to the website www.menti.com by typing in this code, and you will have to make a very short exercise, which has no statistical relevance, of course. But after this day of exchange on several topics that are very close to Finance Watch, and Finance Watch is an expert in these sectors, Alessandro, I think, has just written something in the chat box for everyone. So we would like to hear, ideally, from you, what preference should be given to the issues that the network of Finance Watch Italian members should focus on. So it's still Finance Watch, it's not a new organization, but it is focusing on Italy. So in your view, what are the topics on which it should focus? So I would like to ask you to start answering. Log on to www.menti.com, and this is the code you see here. And then you have to type in this code here. It's very user-friendly.
A brevissimo potrete trovare online, e cioè.
Meanwhile, I will show you what you will soon find online. That is to say, the page of the blog moderated by Finance Watch and Finance Watch friends. So here you will find a short description of who we are, a newsletter, other blogs, a dedicated area for members. And here you can access Finance Watch website. Here you will find contents and blogs that members, but also Finance Watch friends will be invited to share regularly. This being said, and I hope you are voting, meanwhile, I would like to hand the floor over to Finance Watch members with no specific order. So I would like to ask anyone to get started, but just 2 minutes. I want to finish on time. So just a couple of reasons for which every transition, every change we want, and this new normality everyone talks about, must be inclusive. So truly representing different views, different interests, but with a bottom-up approach rather than a top-down approach. We would like to manage like that. So first of all, why were you interested in joining Finance Watch? Well, have you joined with all this enthusiasm? In this, you have joined this network and this network of friends of Italy. Then I would like to ask Alessandro, as soon as he has the results of the small opinion poll, please show us. Thank you. I see Marcella. So maybe it's the first one to take the floor.
Però dare più spazio
All right, then. I'd like to give the floor to the colleagues which have not, let's say, spoken extensively so far. And As far as I'm concerned, I just like to clarify one thing. That is to say, the presence of Minerva Lab that you've listed among the organizers of today's conference, well, as a matter of fact, it is something that stems from my role as coordinator of Minerva Lab, but also as a member of this specific activity. I commit to be the member of it, but it's sort of something clear to all of us. Some of them were with us, and they were talking about the ideas relating to Finance Watch. So it's just me, not the entire laboratory. I just wanted to clarify this, and just to clarify who does what. I'd like to give the floor, and if time allows, I'll make a final statement. Okay, so Antonio, and then Alessandro follows. Okay, thank you. So we decided to become part of Finance Watch because we started from a sort of rather bitter assessment. That is to say, our country has a low rate of financial literacy. We are ranking at the bottom of the European and OECD lists when it comes to financial and banking literacy. And as a consumers association, well, this alarms us a lot because this has negative effects on the ability of people to manage one's savings, or also to manage at best their needs for funds or their debts. So for this reason, Finance Watch represented for all of us the opportunity to develop a network that on the one side intervenes in favor of a higher and higher financial inclusion, and especially of the medium low layers of the European population, and in our case, well, the Italian consumers. The second aspect I like to stress when it comes to the general, let's say, priorities that you mentioned is the tax policy needed for a just and balanced transition. These are the two subjects that we as a citizens protection movement and consumers protection movement will be committed on that. Thank you. Thank you. Thank you so much, Antonio. So now Claudio. Claudio Cornelli, can you hear me? Yes, we do. Okay, so good morning. Good morning. And thank you. Thank you for organizing this event. I say it again. This is a very interesting initiative.
Nel gergo della comunicazione.
That certainly achieved an extraordinary result. So why are we part of Finance Watch? Because Finance Watch is doing something extraordinary when it comes to the finance. And this is a priority for all of us, not just because we are representing the workers of this financial sector, but also because we have the ambition to represent also the citizens as a General Labour Confederation. So we need to have a financial regulation, a regulator in the sector of finance that radically changes the
quasi 30 anni
system that we've had in place in the last 30 years. Then we need a change. The change is near, the change is tomorrow, and the pandemic speeded up this pathway. And from this point of view, we cannot but work as Finance Watch Italy, together with other subjects, for instance, subjects representing consumers or the society, well, to try and work together and have an impact on the change on all of the aspects that we have highlighted today. So thank you. Thank you. Thank you, Claudio. So, Alessandro, your slide is ready. So that would be an input or such comment on it. this is a nice way for involving all those that spend the entire day with us, and also in consideration of what we said so far. So now we had 5 main topics that we are dealing with, that Finance Watch generally deals with, and you see them listed here in this slide. So, sustainable finance ranks first. And in fact, that was mentioned today on several occasions and by several speakers. So these are the 2 topics that participants also consider as a priority for our activity. So thank you. So this is for sure an important indication of the fact that we're going towards the right direction. At this point, I'd like to ask Luciano and Elisabetta, as members of Finance Watch, to briefly share their ideas with us, and then we're closing the conference.
Elisabetta e Luciano.
Luciano.
Vado. Allora, ciao, buongiorno, buon pomeriggio a tutti.
Good afternoon. Thank you. Thank you, Julia. We may just say that this first conference of Finance Watch Italy has been definitely positive, because we had some extraordinary and high quality speakers, and we had it remotely, but I believe that this, let's say, this approach allowed us to receive the contributions of some of the speakers that could not join us and that wouldn't have joined us in person anyway. So, at the beginning, Emilia-Romagna said we cannot save ourselves by ourselves. So this is a clear element to be considered. We have to go beyond the mere financial regulations, also because the financial sector is strategic, not just for instance, the companies, but also for the society as a whole, and for those that simply save their money. So we express our full support to Finance Watch in Brussels, but there's also a national consideration to make. That is to say, how do we intend to contribute to, let's say, create a different Europe, and how to influence, let's say, Europe from the Italian perspective, and then how to lobby. This means we need to develop alliances with a series of stakeholders that we deem to be definitely important and which need to be involved in all this. Here we are as first, and the representatives of the insurance and banking sector. And of course, we're talking about a series of initiatives that we've carried out in the last few years, and which are in line with the things we've tackled today, and whose contents are the basis of the manifesto of Finance Watch Italy, that to refer to our campaigns to limit the wages and remunerations of top managers, and also the situation related to NPLs, and also the very recent campaign for banking and financial advice to be given to customers. the entire Italian banking sector, well, at least the banking side and the union side, where we are fully aware of the importance of this sector. And in fact, in 2004, we signed the first MOU for the social responsibility of banks. So the manifesto we are presenting today is a work in progress. It is a basis. And of course, we are looking forward to receiving new contributions, the contributions from new members, because we are convinced of the fact that we have to exploit at best any single occasion to gather the stakeholders that share a vision of Europe. And I believe that the recovery plan is going to represent a very important occasion to this end. Thank you. Thank you, Luciano. So at this point, I'd like to ask Elisabetta. Can you hear me? Yes, we do.
Sì, allora, mi senti Giulia, mi sentite? Sì, ok. Allora, ringrazio in primo luogo.
Very shortly, we are closing. Okay, so I wish to thank Finance Watch and Julia for her endeavor and for promoting today's conference. Of course, we do represent banking workers, and we've always paid attention to workers' rights, and we've always proposed to act in different ways, for instance, with our collective agreement, but also by promoting joint initiatives. Now, thinking about financial education, commercial initiatives, etc. So we believe it is important to actively involve and to monitor also the events, because timing is paramount. We are surrounded by a world in which actors change rapidly and also the rules change rapidly. So the setting up of Finance Watch in Italy represents an important ring in the entire chain for allowing the working group made up of different perspectives to voice one's needs and problems and issues, and then to assess the social impact this can have by having a fruitful and continuous relation among us. Thank you. Thank you. Thank you, Elisabetta. So at this point, Andrea Baranes, Finanza Etica. Sorry, I have some connection problems and then switching the video on. I'm not reiterating all the things said so far. In any case, from the financial literacy onwards, everything is important, including the activity in fair trade and everything that deals with finance, fair finance. We have to make a good use of money, of our money, and we need to know how money is used when it's channeled in the financial sector. So we need to change the rules of the game, and this has to be done through financial literacy, financial information, and also we have to comply with the financial regulations in force and to be able to act as counter lobbies against financial lobbies, but also to be proactive and try and propose our own model and also to implement it among our and within our institutions. So this means that we have to deepen our relations and an initiative like Finance Watch Italy is a two-way approach. Then understanding what happens in Brussels and then understanding what happens in Italy, and to exchange views and promote these activities at best. So this is what I'd like to add. And I'm not reiterating all the things I had so far, which I fully share. I wish to thank Julia for the extraordinary work done in the organization of this day, and also for the for acting as a moderator of this day. Well, thank you. It's been a teamwork, and I have to say that it's been a sort of old style teamwork that I like to share with all of you, with all of my colleagues from Finance Watch in Brussels and in Italy. Last but not least, Marcella Corsi that asked for the floor, and then we are closing. No, I didn't mean to be the last one. I want to take on this task. Actually, I just wanted to say that I'm really happy for this exercise that was carried out, which is going to inspire us for the future, for the drafting of the manifesto of our group. And also, this is a sort of foundation on which we are building up further activities. We're going to share views with the other organizations and with the other groups, and we do invite them to continue to work with us also proactively. And I forgot, I never introduced myself. Okay, so I am professor of economics at the La Sapienza University of Rome, and so this is part of the DNA of my activity as, let's say, trainer of young talents. And I reiterate what I said before, and I said it, I always believe in a sustainable finance, including, in microfinance. And it's very important. I hope this is going to set the example for other colleagues as well that joined me today. It is very important to show the sign of role model, and also to share the results of this research, to truly and really change things. So you'll see me involved, at least in my twofold capacity. Thank you. So at this point, truly, really, thank you. I wish to thank you for spending these hours together. And as a network, I hope this is going to be just the beginning of a new pathway. So I do invite you to follow the activities of Finance Watch. You can do that in several different ways. And of course, through the website, and also through our social media, Twitter, Facebook, newsletters, and of course also, as said before, through the blog that is about to be launched. And then you will access the blog through the homepage of Finance Watch. So that concludes our day together. I thank all of you. I thank the members and the friends of Finance Watch, and I really hope I'll see you soon. Thank you. Thank you once again.
Ciao.
Ciao, grazie. State bene soprattutto. Ciao a tutti.
Posso andare?